space has been broken down on my channel multiple times. So if you want to learn more about that, you can check it out. So buying Bitcoin is also going to be a really, really good solid way to make some currency due to the fact that one has some value behind it. It's virtual diamond and gold. And two, it really helps society. People are able to trade money within a quick way all across the world, okay, due to the fact that Bitcoin exists and they get something out of it. So it's while a potential long-term asset, it carries significantly higher volatility. Sometimes it can go downwards in the downwards direction, okay, causing you to lose your money, but no risk, and different risk factors compared to equities. So the HODL mentality. Okay, HODL stands up for hold on for dear life. This reflects the need for extreme patience. Okay, so you cannot sell early. If you put yourself in a trade, okay, and if you marked it out and the trade's working out, don't just sell early, taking your profit. Okay, let it ride out. Try and hold a trade for some years, okay, and see how much progress it's gonna make. Okay? Especially something on Bitcoin, like it's not something ideally that you want to be scalping. And given the volatility, most the time I would say try and keep your account with like the remaining amount of money that you have. So even after you bought your stocks and stuff like that, your crypto should be your final portfolio that you invest in. And unlike stocks and a brokerage, you're responsible for the security of your crypto assets. Okay, so use good brokers and use brokers that are going to be safe and keep your money secure. And you could directly buy cryptocurrency with your card, okay, like Coinbase, Kraken, or whatever. Okay, and then you can go ahead and send it to another wallet if you would like. So stock options, okay, it's going to be a great place to make some income, but it's also going to be a great place to lose some income. Okay, so you have to really be technically advanced. Make sure you're studying. So stock options are advanced. They're leveraged financial derivatives, and as a beginner, make sure you guys are mastering and studying the charts before you even touch options. Okay, if you're struggling with options, head over to stackmode.net. I'll teach you guys how to trade it. Okay, options is not something that you want to be playing around with without the information first. Take your time. So the contract. Okay, an option is a contract giving the buyer the right but not the obligation to buy or sell an asset at a specific price, also known as the strike price, on or a specific date. Okay, so if you think price is going to go in the upwards direction, then you would buy what's called a calls contract. If you think price is going to go in the downwards direction, okay, then you go ahead and buy a puts contract. Okay, so if price went from $32 a share and you think it's going to go to $40 a share, and it did, and you have the right contract, you would make a lot of money. Okay, if you think price is going to go down to $20 a share, and price is at $25 a share and it goes down, and you're in a $20 a share contract, or $21 a share, $22 a share, anything, anything under that, and take profit's going to be 20. Okay, so anything under 25 would go ahead and be an ideal contract, and that would go ahead and work. And it gives you the right to pretty much get paid based off directional bias. And options allow you to control $100 worth of shares for a small fraction of the cost, and this magnifies profits, but critically it magnifies losses just as quickly. And the intrinsic value of the option decays over time. Okay, meaning the contract is constantly losing value as it approaches expiration. So, eighth wonder. So compounding is going to be the process of generating earnings on both your initial investment and on the accumulated earnings from previous periods. And it's the engine of long-term wealth creation. Put your money in a loop. Okay, when you get some money from your business, invest it. And then when you make money from that, invest that. Okay, put your money in a loop. Your money should be like a tornado, a big whirlwind. Okay, and that's going to cause exponential growth, inshallah. And the returns generated in the last years of an investment journey are vastly larger than the returns in the early years. Even if the dollar amount invested remains the same, the accumulated interest is doing the heavy lifting. And time is the key multiplier. Time is going to go on anyways, as long as you're on Earth. So just let your money make some money. A person who invests $5,000 per year per 10 years, okay, so let's say they have 50K, starting at the age of 25, will have significantly more money at 65 than a person who invests $5,000 a year for 30 years, okay? for a total investment is going to go ahead and be 150,000. Okay. So invest. Okay. Get into stack mode, take your time, put money away, and just keep grinding, keep grinding, keep grinding. Okay. You guys got it. Okay. And don't let your emotions get to you. Okay. This is why God's gonna be really important. Staying humble. Okay. Because sometimes you can have a little fear, especially as a beginner trader, and don't panic. Don't sell when it's not time to sell. Okay. And don't buy when it's not time to buy. Okay. That's being greedy and being fearful. Once again, being emotional can destroy it all within your trading assets. And buying into an asset just because everyone else is making money, okay, during a speculative bubble, for example, this usually results in buying at the peak at all-time highs. Make sure you please know how to read the charts. It's a left to right charts, and it's called trading for a reason. When you're losing, somebody's winning. When you're winning, somebody's losing. Stick to your fundamental analysis and plan allocation. Okay. And as far as the IPS, the investment policy statement, write down your goals. Okay. Write down what you want to achieve. Write down how you're going to achieve it. Okay. And write down how you're going to break it down. I recommend you guys have 2 accounts. Okay. 1 account for your long term, and then another account if you want to go ahead and day trade, swing trade, whatever. Okay, up to you. Okay, they have 2 different types of tax benefits. Your long-term account, I recommend you guys holding a trade for over a year. Okay, so you get the long-term tax benefits. And then if you're gonna have a day trade account, just use that and then pay your short-term tax. Okay. So get ready. Okay, fund your emergencies, pay your bills, clear your debt, and then you're gonna be ready to trade. Okay. And then you can go ahead and do a Roth IRA and a brokerage account if you want, okay? And go ahead and set up your initial long-term investments and start saving money through there. And stay the course, okay? Check your portfolio quarterly, not daily. Ignore the market noise and volatility, and let compounding work as magic over decades, over time. And the biggest risk is the risk of not investing at all. So start today, okay? Stay praying to God, keep grinding. I'll catch you guys in the next one. Peace. Hey class, we're gonna go ahead and jump into it. Here's how to start investing with only $100. Okay, so instead of buying McDonald's, instead of buying liabilities, which are gonna be items that we just don't need to be buying right away, let's get in stack mode. Let's invest. Let's put some money into stocks, some dividends, and I'm gonna go ahead and show you guys how we can invest with just $100. Let's jump into it. So the power is starting small, and the biggest obstacle isn't the amount of money, it's the delay. So start today. Okay, start today. I don't care if you guys have $50 even. Okay, just start today. Okay, start today. Start doing multiple things to increase your income so then you guys can go ahead and invest more over time. Okay, but instead of just having your money being lended out by the banks, and while the banks invest with your money that's sitting in the bank account, you should be investing yourself. Okay, so you can invest in things like stocks. It's going to be things like ETFs. And certain things that pay dividends, which is going to be quarterly money that you get just by investing. Okay. So find certain plays, do your research on certain stocks that you like, do your research on certain ETFs that pay out certain dividends and that move in a positive direction. Okay. And understand that the biggest obstacle isn't the money. Okay. The real reason people don't make money within the market, even if you have $1 million in your account, some people it's still not, and they are profitable. That's because they struggle with discipline. They don't know how to find the right plays. So make sure you guys do your research first, and then you're going to be able to understand that, okay, the amount of money I have isn't really that subjective. It's really about the trades that I'm making. Am I making confident trades? Am I making informed trades? Am I making sure that my take profit is relative to wherever my entry is? Okay, do I know where I'm going to exit? Do I know where my stop loss is? Okay, once you start understanding all those things, you'll understand that discipline within the market actually equals the profits. Okay, so even though you're talking about $100 or starting small, forget about the money. Okay, I'm gonna go ahead and just give you guys the full truth. The real reason people don't succeed in trading is because they're trying to get rich too quickly. Okay, it's about discipline, grinding day after day, and growing and compounding your account by being disciplined. Okay, waking up, praying to God. Okay, studying each setup and taking it trade by trade. Don't try to rush anything, and stop thinking or stop trying to get rich overnight. Okay, it's gonna take building, grinding, and you should be able to fall in love with the process. That's how you'll really get to where you want to achieve, inshallah. So the time matters, not the amount. The most powerful variable in compounding is time. Starting with $100 now beats starting with $1,000 next year. Do the magic of interest compounding on itself. Okay, so just start with your $100 now. So instead of being like, oh, you know, I'm gonna go ahead and wait for it with you, just start now. Okay, go ahead and drop that money in your account and don't wait. Okay, time is not guaranteed either. You don't know when they're gonna pass, and just start going hard. We don't have time to think about anything else. Just start going hard and build the habit. Investing $100 consistently every month builds the discipline needed for long-term success, and it trains you to save and automate before the amounts get larger. And overcome fear. Starting small limits your downside risk while providing valuable real-world experience, and you learn how the market works without the fear of major losses. Okay, so study the market, paper trade, know how the market works before you start throwing even more money into it. Okay, so I'm just gonna keep it 100% honest with you guys the whole video. The market is gonna make you guys humble. Okay, you have to self-reflect. Don't think you're gonna come into the market with ego. Okay, don't just try to throw all your $100 into a 0 DTE play. Okay, take your time. Okay, throw it into a long-term play, really get the grasp of the market, generate some more income, and then keep funneling your profits. Even if you do win a day trade, all right, funnel that into long-term trades. Okay, whether ETF, stocks, whatever. Okay, this way your money's gonna always be making you money. Understand that money's a tool, not just a tool to go buy nonsense. Okay, money's a tool that feeds us. Okay, we use it to pay our rent so we can have a roof over our head, or pay a mortgage, or buy the house. Okay, and it's also used as a tool. Use it for your business, use it for your account to make more money, and real estate as well too. Okay, so even though it's a small amount of money right now, cultivate your mindset into thinking, okay, I need to start understanding how I want to distribute my money. Even after you make some profit, make sure you always withdraw at least 30% of whatever money you make, whether it be at stocks, your ETFs, your business, whatever. At least put 30% away for taxes. Okay, I personally try to put 50% away of all my profits away. This way, after I pay taxes, I have overhead. Okay, but you guys can go ahead and manage it how you would like. So step 1 and 2, the right broker and account. So step 1, pick a commission-free broker. So a broker is going to be a place where you're going to be able to buy certain stocks. You're going to be able to buy ETFs, okay, which are exchange traded funds, which are normally like a collection of stocks and stuff like that. And you guys are going to be able to invest. And you need a modern brokerage that allows you to buy stocks and funds for free. You guys can go to my free course at stackmode.net. And I have many guides on how you guys can go ahead and set up your broker account. So a lot of brokers have small commission too, which means that when you put down a trade, you're not going to be getting destroyed by fees. This is also why it's important to be putting down trades within a logistical basis. So you shouldn't be spamming a million trades a day, because fees can also eat up your profits. And fractional shares, okay? Fractional shares are also going to be something where you can invest with not the full required amount. So say a stock, say Stackmode stock costs $500 a share. Okay, a Stackmode stock costs $500 a share. Even with $100, you'd be able to buy a fractional share of that. Okay, so you could just be able to buy a fractional share and you'd be able to own it. So instead of owning a full share, you'd own like a 20th of the share. Okay, for example, something like that. Okay, and you can use Fidelity, Charles Schwab, Vanguard. So, and open a taxable brokerage account. First tax account is a simple individual taxable brokerage account, and it's the easiest to set up and fund. Okay, so go ahead and set up a just simple individual account if you're not trading with the LLC, which I think you need at least $100,000 in certain trading profits to show in order to trade with an LLC first. Okay, so make sure you guys can withdraw your money too within a pretty quick and simple way, like instant debit card in case you ever need to get your funds out, and have certain goals too. Okay, so what to buy? So you guys can buy low cost index funds like ETFs. So for new investors, diversification is going to be protection. Okay, so it says don't buy single stocks here, but I'm going to go ahead and just block this part out here. It's not true. Okay, you can buy single stocks. Single stocks are going to go ahead and be something that's going to go ahead and be worthwhile. But reason I do say that is because you guys need to know how to read the chart, and this is what we're going to go over here in just a second. Okay, reading the chart is going to be imperative. Do not buy single stocks if you do not know how to read the chart. Okay, so the goal of ETFs, they let you own a small piece of the entire US stock market. And for recommendations, they let you choose ETFs, also known as exchange traded funds. And some popular choices are like the VOO, and that tracks the S&P 500, and that's the 500 largest US companies. The NASDAQ 100 is going to be the largest 100 tech companies, and Dow Jones 30, also known as US 30, also known as YM, is going to be tracking 30 companies. And VTI as well, it tracks the entire US stock market with over 3,000 companies. And the magic of fractional shares as well too. So in case you don't have enough money to buy the full ETF or stock, okay, and you can go ahead and either buy $100 in shares, or you can buy fractional shares. Okay, so you could buy a small cap stock. When a VOO costs $400 per share, then you wouldn't be able to buy a whole share because you only have $100. So fractional shares let you buy $100 worth of VOO, giving you 0.25 shares. And $100 divided by $400 equals 0.25. Okay. And all growth and dividends apply to that fraction, immediately diversifying your first investment. Now, I need you guys to just make sure that you're knowing how to read the chart before you invest into those normal stocks, because what you might do is just buy at all-time highs and then get pulled back on, or you might not see profit for a long time. Okay, so in just a moment, once again, we're going to go over how to just read the chart quickly. So your simple investment action plan. So 1, fund consistently. So commit to transferring money automatically. If $100 is too much, do $50. And consistency is more important than the initial amount. Consistently put money in your account, consistently stay down, live way below your means, and just keep investing, letting your money make more money. Ignore what everyone else says. Don't listen to what certain people say. Okay, it doesn't even matter. Okay, just live your life. You know what you're doing. You know what you have in the stash, and you're in stack mode right now. You can't let anyone tell you anything. Okay, only God can judge you. You're good. Okay, and automate the buy. Use your broker's auto invest feature to buy your chosen ETF. Okay, also for like VTI, for example, immediately after your deposit hits, and this is called dollar cost averaging. So you can go ahead and do auto investing if you want to. You could do that with certain things too, like Bitcoin, certain cryptocurrencies. You're also going to be able to invest into, as well as dollar cost averaging. So just when you are investing, make sure that it's a consistent thing. Yeah, you can't just put $100 in something and expect to get rich immediately. Okay, and you can't really expect to get rich immediately at all. So you need to be understanding that you have to be constantly funneling money into this. So that's going to be your start, and start building your pool. Turn that $50 into $5,000. And don't forget that a lot of this is going to be saved too, because especially when you invest in something that goes up within a positive direction, okay, a lot of the times your money's just going to be growing positive equity. And ignore the noise. Okay, have a 20-year view on the market. Check your portfolio quarterly, not daily. Your time horizon is in decades. As short-term market drops are buying opportunities, not reasons to sell. Okay, so buy the dips, and just in a second, I'm going to show you guys how to identify the dips. Okay, so you need to be being patient when it comes to waiting for your trades. Okay, so when you're waiting for your trades, you need to understand 2 things. Okay, 1, okay, have a goal behind your trade. Okay, so I'm going to go ahead and just show you the types of setups that I like to take. Okay, so 1, we're going to go ahead and talk about how, if market, especially if I'm investing in something that's I'm expecting to go in an upwards direction, and that's the whole goal of investing. You're trying to make money by buying and holding, okay, getting percentage equity curves and positive gains on your original dollar. Okay, so there's going to be 2 things that you need to know whenever investing. 1, okay, when it comes to the stock market, cryptocurrency market, ETFs, whatever, understand that the goal of them is to go within an upwards direction. There's people behind these stocks, people behind these cryptocurrency tokens, coding, putting in tons of effort, investing into it behind the scenes, putting in a lot of grind and effort in order to grow the company or cryptocurrency token. Okay, so they're definitely trying to get their piece of the pie and have their token go up or have their stock go up. So know that an area of resistance is always trying to be chased and broken. Why? Because price cannot go up until price breaks an area of resistance. And what areas of resistances are going to be areas above current price. And you can download things like TradingView to read the charts. And you can see areas above current price where you see price decided to make a dramatic downfall. So we're going to have an area of resistance here and an area of resistance here. Once price decides to pass these areas, price wants to try and progress to the next area. Now, understand that price can also reverse areas of resistances, and also know that price can break past areas of resistances and turn it into support. That's going to be one of the safest things you guys can look for when it comes to buying at the right time. So if you ask me, so Chris, how do we know when it's going to be a good time to buy? So check this out. One, you're going to be needing to use your higher time frames. I like to personally use my daily and 4-hour time frames for almost everything. Okay, then from there, I'm going to go ahead and analyze my trade. I like to go ahead and look above current price. Okay, make sure something has a good resistance above current price, because I know at least price has something to chase. If price is at all-time highs and there's no area of resistance above it, okay, there's not really much it can do. There's not really much progression it can make. Okay, so price has to have an area of resistance above it in order for it to chase something. Price can keep going at all-time highs, but you're not going to be able to play structurally. So check this out here. So just like we talked about resistance, and that involves an area where people want to go ahead and sell whatever they're invested in. Okay, and we have to remember that this is a left to right chart. So people got in from way over here, for example. So eventually, of course, they're going to go ahead and sell in areas like up here, an area of resistance like right here, yeah, an area of resistance here, area of resistance here, okay, and an area of resistance up here. Okay, and the opposite of resistance, there's going to be something called support. Okay, so you're going to see this area here where price decided to tap at this blue line and then go within a upwards direction. Okay, so this is going to give us an area of support. And up here is resistance. So whenever you see price making a top and then falling in a downwards direction, that's resistance. Whenever you see price making a bottom and bouncing in an upwards direction, that's support. And remember what I just told you, resistance can sometimes be broken and turn into support, even if it takes a long time to come back to the area of where the resistance was. So check it. So price can come over here, okay? And we could see price create an area of support over here, okay? So once again, this is support because price went in a upwards direction. And then we can see up here, price decided to create a heavy area of resistance. And we're using our higher time frames because it gives us an ability to see absolutely everything. Resistance. Okay. So that's going to go and be that. So we can go ahead and see over here or something. Okay. Check this out. So we can see that this area of resistance created over here. Okay. We can see resistance got created. A price fell in a downwards direction and then bounced up. Okay. As we can see, price decided to also create retest here. So price broke the resistance, turn it into support. I like to call the first tap of what I call break and retest. Okay, where price breaks resistance, turns it into support, or price breaks support and turns it into resistance. That's the recommended model I recommend you guys play at any times. Okay, so when this happens, then you can go ahead and wait for resistance that was broken to be pulled back to. And if support gets held, then I recommend you guys go ahead and invest. Okay, you guys can go ahead and invest and try and take the sweep all the way back up to the upside. Okay, and catch your sweep like that. So investing is really going to take patience. If you are struggling to learn how to read the chart, I give you guys a free mentorship call at stackmode.net as well. So start now. Now that you know how to read the chart, no excuses. Go ahead and jump in and make sure that you guys have a broker installed. You can use Webull, Robinhood, any broker that just works for you. Okay. And you could buy ETFs, you could buy stocks, okay? You could buy penny stocks, okay? Just buy something that you've done intense research with, and you can go out and get investing like that, okay? Step right up to God, keep grinding. And once again, if you guys need investing help, head over to stackmode.net. Catch you in the next one. Peace. All right, let's go ahead and talk about how we can go ahead and make income by trading options. It's going to be a simple guide, an easy guide, and we're going to go ahead and break down the fundamentals of why stocks go up in the first place, what options is, and how we're going to use this whole logical formation to make some money. So one, let's talk about what an options is in the first place. So an option is going to be a contract that lets you trade 100 shares worth of value. Okay, so it's pretty much going to be a leverage asset, and it gives you the power to trade 100 shares per options contract. So if you don't have enough to buy 100 shares, but you have enough for an options contract, then you'd be playing with the power of having 100 shares. Now, the best way to play options is to take advantage of the time. Okay, so on options, you're not just getting 100 shares to play with 100 shares, you're playing against
time as well too. So on options, you get paid based off of predictions. Okay. So whenever you're buying an options contract, you're thinking that price is going to go to a certain direction. And if it hits it, then you make money. So it gives you the ability to play with 100 shares worth of product. Okay. Whatever stock you play with, one options contract equals 100 shares worth of pretty much leverage. Okay. But the downside to it is that there's going to be time. Okay. So unlike shares where you can sit there and hold forever, options contracts actually have expiration dates. So these expiration dates will trigger whenever the expiration date hits. Okay, so we'll talk about that as time goes on. Every option expires on a certain date. Now, there's going to be two ways you can play options. Okay, you're going to buy a call option, and then you're going to have a put option. So you have a call option and a put option. So call options we're going to play if we think price is going to go in an upwards direction. Okay, so if you think price is going to go up, let's say current price is currently at 26 and you think it's going to go to 28, then you would buy a call option. So call equals up. Okay, if you think price is going to go in an upwards direction, you'd buy a call. Okay, think of a call like, what do you do when you call somebody? You pick up the phone to call somebody. So pick up to call. So up equals call. And a put equals if you think price is going to go down. So if current price is at 26, you think it's going to go down to 24, then you will buy a put. After you're done picking up the phone to call, you put down the phone. So think of put down, you put down the phone. Okay, so you're going to be putting down the phone. Okay, so putting that into logistical reasoning, let's go and let's keep talking about certain things. So the stock market, okay, so options give you the ability to buy 100 shares. Okay, you're going to buy 100 shares. And I like to look at the market all the time on my higher time frames. Okay, so the higher time frame that you're looking at the market at is the real answer. Okay, so I like to look at the market on 3 time frames I'm going to be focusing on for options. I'm going to be focusing on the weekly. The weekly time frame is going to be my full eyes for everything too, and so is my daily. Okay, so the weekly and my daily, my higher time frames, they're going to give me the true price action. See where true areas want to be created at and where true areas want to continue towards. Okay, instead of me being tunnel vision on the smaller time frames, on the minutes, getting told a completely different story. Okay, we can use the weekly and we can use the daily to put a logical trade into perspective and win, and so on. Okay, then after the weekly and the daily, we can go ahead and go to the 4-hour time frame. Okay, so the 4-hour time frame is going to be the last time frame that we're going to go on. And the reason why we're going to use our 4-hour time frame is that in the bottom right, you're on your trading view or wherever, you're going to see something called extending trading hours. Please make sure that that is enabled. Okay, extending trading hours is going to let us see every single candlestick that we need to see that we can't normally see on the daily or the weekly, since the daily and the weekly time frames don't show pre-market or like the weekend stuff sometimes. Okay, so in order to see the full picture and make sure we're seeing everything we need to see, we're going to do top-down analysis. We're going to go from the weekly to the daily to the 4-hour. Okay, from the weekly to the daily to the 4-hour time frame. Okay, and that's what we're going to do. Okay, weekly, daily, 4-hour. Okay, making sure we get the whole perspective and picture. Now, let's talk about why stocks go up in the first place. So stocks just don't go up to go up. Okay, stocks go up for a certain reason. Okay, one, these stocks fuel the economy. Okay, and what the economy is pretty much jobs, money, and just what's going on within the United States. Okay, so these stocks fuel the United States economy. They put jobs within the market. Okay, and jobs lets people feed their families. Okay, and it also generates money for the economy too. The more money companies are making, the more taxes they get to pay to the government, thus boosting the government economy. Okay, so these companies aren't just random companies. Okay, people work at AT&T, people work at Amazon, people work at Wells Fargo. Okay, there's people who work on these actual stocks. Okay, and you might even be working at one of these stocks at some point in time. Okay, there's people who work at Chevron. Okay, people who work at these stocks. So these stocks employ people. Okay, And in order to employ people, that means a company has to be making some money. And if a company is making money, that means they're paying taxes to the government, which is helping out the economy. Okay. So stocks have an invitation to go up in an upwards direction. There's also going to be these things down here, which you're going to see the blue D's. Okay. The blue D's at the down here are going to be called dividends. So whenever a company is profitable and it starts making money, what it's going to do is anyone who's investing into it, they're going to give them some money back. So the whole reason why companies put stocks on the stock market anyways is because of the fact that they want to generate some more money for themselves. Okay, so they're going to generate more money for their company by having people invest into them. Okay, so instead of begging for $1,000, they're going to just put their company on the stock market and have 100 million people invest $1,000. Okay, which is going to be a lot better. Okay, and then from there, after they use their profit to do whatever they need to do, whether increase company production, hire more people, pay more people, etc., they're going to go ahead and pay what's called dividends. Dividends are going to be money that they pay out to the shareholders. If a company has enough money to pay out people who aren't even employees, but they can pay out its investors, that's a really, really, really good sign. Okay, a good sign that the company is making money, okay, and that the company wants to continue in a positive direction, most likely. Why? Because it wants to take care of its investors and wants people to keep investing. It's just paying people for no reason. Okay. There's a reason why they give those dividends out. Okay. They want people to keep investing. Like, come on, we'll pay you guys to invest into us. And then they're going to take that profit, do what they need to do, and then go ahead and make their trade and do what they need to do based off of that. Okay. So let's go and let's talk about hopping on the chart, what we need to do to find a setup, and the type of setups I like to take in first place. So I'm going to start off with the type of setup that we just don't take. Okay. So the type of setup that we don't take is where we don't really take trades when they're all-time highs. Okay. So if market's at all-time highs, that's not something that we want to trade. Okay. So all-time highs means that market, it doesn't really have much further it can go in upwards direction. Okay. So when market's at the tippity top, okay, can't really go anymore, we're going to stay away from that until market decides to come down. Okay. So even here on Google here, okay, and I'm going to always start off on my weekly time frame. Okay. So I'm going to look at the highest area of resistance all the time. Okay. So once again, these companies employ people too. Okay. They're competitive. And one way companies can be competitive is by having the highest share price. So if one tech company has a higher share price than the other tech company, it's going to clearly show that one tech company is more valuable than the other. Okay. Share price is going to show how valuable something is. And this is a competitive world. Human beings are all competing with each other for the best spot. Okay. And there's people coding many hours behind these companies, working behind these companies, investing. So they want to see their share price go up so they can increase their revenue. Okay. And pay out more to their investors, which is going to signify people to invest into them back more. So it's a full circle plan if the share price goes up. A lot of advantages. But what I'm going to stay away from is when price is already near all-time highs. Okay, I can see there's not much of a gap here left to the all-time highs. It's around 5 points left, okay? So even if I did take this trade here, okay, which would be possible, I know that price wants to always break all-time highs. Why? Because it's a competitive market, once again. Price has incentive to go in an upwards direction. So that's why for options, I'm only going to be focusing on call options. That's all we're going to be playing. If you're playing the United States stock market, you should only be playing call options. There's no reason to short the market. You could just buy something else that already made a low. Okay, so you could see Google decided to make this low down here based off of this area of support right here. And we're going to jump into exactly what that is. And then price decided to bounce in a upwards direction. Okay, and we know where it's going. It wants to meet up with this area of resistance and try and break it. So just like we know, areas of resistance will either try and reverse or break. Same thing with support. So we can see support decided to bounce at the same place twice. And what support is, it's going to be an area of demand. Okay, once again, we're going to be looking at everything on our higher time frames too. The weekly, the daily, and the 4-hour are going to show you the true key areas of support and resistance. So support, it's an area where buyers are, and it's going to signify demand. People want it right there, okay? And buyers are stepping in. So support has the ability to mirror itself like that. price decided to bounce in an upwards direction at one area of support, price came all the way down and bounced at the same area of support again. Okay, that's how simple market can be. Okay, two areas of support being bounced at, and then price decided to go in an upwards direction. And then we could see here, price stopping at this area of resistance here. Okay, price fell down once, fell down twice, okay, and it tried to fall down the third time, but now we're trying to get above it. Okay, so we came up here, fell, came up here again, fell, came up here again, fell, and now we're trying to break above it. Okay, so just like areas of support can bounce on each other, we also can have areas of resistances bouncing at each other. Okay, so even if market decides to run through it, market can still repeat an area. Let's talk about what that means. So say price decided to bounce at an area of support. Even if price broke the support, if price came back up and then bounced at the same area of support again, that would still be a good area for me to go ahead and purchase because it's doing the same thing. Same thing with resistance here. Okay, if I was taking a certain example like this, okay, then you could see price would still potentially mirror what it needs to, even if it ran through the original one. Okay, so, and that's gonna be the same thing said with break and retest too. So price formations will always look like a mirror. Okay, it'll always look like one of these things. Okay, it'll either bounce at the resistance twice or bounce at resistance twice like this, even if it ran through in the middle, or bounce at support immediately, one support into the next, or support, run through it, and then bounce at support again after it comes back above it. And then we have the ability for price to take the area of resistance, wait for price to break it, and turn it into support. Okay, and then wait for price to go in an upwards direction. Okay, so support can be broken and also turned into resistance. Okay, so this is mainly the setup we're going to be focusing on though, since we take calls. So we're going to be waiting for resistance area to be broken, and then we can wait for that area to turn into support. And if so, we can take it up if it's probable. Or we're going to take a support mirror where price is just going to bounce at certain low like this and then bounce again. Okay, making it extremely easy, making it easy to be successful within the market. Okay, so the reason why we're closing at areas of resistances is because these are where areas can reverse at. If we're buying a call option, that means we're expecting price to go in an upwards direction, just like the workers are, just like the competitors are, just like the CEO is. Okay, they all want their stock to go up. Okay, so it's a bunch of people who want the stock to go up versus down. The CEO doesn't want it to go down. The employees don't want it to go down. We don't want it to go down. Okay, so that's more people who don't want it to go down than there does. And the government doesn't want it to go down. Because if these companies can't stay alive, the economy would suffer. Who's going to bring our Amazon packages? Okay, things like that. Okay, these are important companies that run the world. So price is either going to bounce at areas of support, okay, or it's going to fall down at areas of resistance. Okay, and why price decides to fall down at areas of resistance is because there's too much supply. Okay, there's way too much of it and people want to sell off. Okay, they're already up a bunch of money, and it's going to indicate an area where sellers are going to be at. Okay, so resistance indicates that's too much supply, so people are going to go ahead and sell. Okay, they got in way down here. Of course, they're going to go ahead and sell. It's a left to right chart too. Okay, so people got in way back here. Of course, they're going to go ahead and take profit eventually. Okay, so whenever you see market going down, all it is people taking profit, taking their money off. Okay, and since I know price wants to keep going in an upwards direction, since the CEO, the employees, and we want it to too, and the government does too, I like to only take trades when I have resistance above current price, so price has something to travel to. Okay, and even if price decides to reverse at the area, okay, like it did over here, even if price decides to reverse at the area here, 1, 2, and then 3 times, right? One time, eventually, inshallah, it'll break the area. And if it breaks the area, it's going up to the next area of resistance. And it'll try and break this and maybe reverse here. Okay, and then break this, maybe break and retest and continue on. But price always wants to do one of two things when it comes to the stock market. It wants to always try and chase an area of resistance above current price to either reverse at it or break through it. Okay, so we're always going to be chasing an area of resistance above current price or an area of support above current price. Okay, because we know, just like we talked about, support can turn into resistance. Okay, so price might need it to come up to the support, turn into resistance, and then break the resistance. Okay, but we know price at least wants to go up to the area of support above current price to maybe turn it into resistance, so price can go down further, collect ammo, make a new low, and then break the previous area of resistance and support, making it line up with the new area of resistance. Okay, so that's how things work. Now let's go ahead and jump into some setups. Okay, so what I'm going to go ahead and always do is start off on my weekly time frame. But I like to start off on my weekly time frame, and we'll go to 10 through 100. Okay, so criteria I'm going to be looking for. Okay, this is not fit criteria. Okay, this stock right here, it's at all-time highs. So this is why I start off on my weekly time frame. If I zoom all the way out, this is the highest point of the market. Why would I buy at the highest point of the market? So I can eat the whole dip down and then be in the red? No, we're not going to be doing that. Okay, we're just going to go choose something else. You do not want to be buying at all-time highs, because if you're on drawdown getting pulled back on, you're going to be upset. So we're not going to buy at all-time highs. What we're going to do is make good, logical decisions, and we're going to be patient. Do not buy at all-time highs. Okay, unless it's Bitcoin or something like that, do not buy at all-time highs. Do not do that. Okay, and even with things like that, I don't even recommend all-time highs, but some things you're investing into to just stack cash. Okay, you don't really care where you buy. You're just using it to stack cash. You know, price is going to try and break it, or just using it more of like a savings and stuff. But when it comes to your options plays, you have to be extremely precise. Do not buy at all-time highs. Try not to buy anything at all-time highs, because yes, price can continue upwards if it wants to, but since there's no resistance or support above current price, you don't know how high it wants to go up. So you're pretty much just gambling, because there's no structure up here. You don't know where it wants to travel to. You don't know where it wants to stop at. And you're pretty much making random miscellaneous decisions that you just don't want to be making, okay, within a market that can be played if you just play it correctly. Okay, so all-time highs is one thing I'm going to go ahead and ignore. I'm just not going to take that. So I'd rather take something like this, for example. So I'm going to be on my weekly time frame. Okay, and once again, I know price wants to always chase areas of resistance above current price. Okay, so I can get on my weekly time frame and I can see this area of resistance above current price. I'm going to go to my daily. Okay, and I can see the area of resistance up here being created. Okay, before price decided to fall down. Okay, even if I want to do this area down here. Okay, there's the whole area of resistance right here. Okay, we have this area of resistance right here. And then we have the area of resistance right here. Okay. So I can wait for price to easily just fill in this gap here. Okay. And how do I know it's ready to fill in the gap? So this is one thing I'm going to pay attention to. Look at the low. Okay. So on your weekly and your daily time frame, if you see price made a low already, okay, you can see price here making a low. You see price making a low. And one thing we're never going to do, okay, so you could say we have one area of support here, and then I have one area of support here in the same exact area. One thing we never want to do is buy in the zone, okay? I would wait for a candlestick to get above the zone, okay? Whether it be on my weekly, my daily, okay? I'm going to wait for a candlestick to get above the zone. So if I see price bouncing at this area of support, right? And then I see price coming down again. So we have this area of support here too. And then let's see I have price coming down here again, right? To bounce up. I'm not going to buy the first candlestick in the zone. Okay, this candlestick right here in the zone, I'm going to ignore it. I'm just not going to play this one. Okay, because it's in the zone. What I'm going to do is wait for these candlesticks above the zone. Okay, these candlesticks are above this gray box where these bounces are. Okay, because I don't want to buy and then see it wicking and then get dumped down on. Okay, no. I'm going to wait to see if, like, okay, price actually wants to confirm the support. Even if you got to wait a couple of days, see if it wants to happen. Okay, just because you didn't get the super low entry, don't cry. That's not money you're missing out on. If anything, this is better. Okay, because it's just showing you that price wants to confirm itself. Now you can clearly see this whole rest of this gap up here is straight profit. Okay, straight profit. From here, price already made its low. You're playing an upwards chart. Okay, Coca-Cola, there's plenty of people who work here. Okay, and price most likely wants to go in an upwards direction here, or already created a low. So this whole area of profit up here until the area of resistance, and we're going to close the area of resistance because price could fall all the way down even lower if it hits that area of resistance. So we know price wants to at least hit the area of resistance. It could either fall down there or it could break out above. But either way, it wants to hit there to see what it's going to do. So we're going to take advantage of that, and that whole gap up until the area of resistance, okay, is what we're going to go ahead and take and what we're going to go ahead and trade. Okay, and we're going to take that up to the upside and use that as the remainder of profit. Now, for the contract, okay, so for instance, I will come over here. So as of when I'm recording this video, it's October 2025, right? So I like to buy at least 3 months to like 2 years out. Okay, so to be safe for this trade, okay, since I found my trade on my weekly, I would go ahead and buy a year out. Okay, about. So this is how I know this is the best contract to buy. I would look in the middle, wherever current price is on your options contract list. You're going to see current price. Whatever the one above the current price is going to be the best contract to buy. I don't care if your take profit is all the way up here. Okay, whatever the one above the current price is the best contract to buy. And the reason why is because on options, you're getting paid based off predictions. So if you think price is going to go to 70, okay, but you buy a 67.5, okay, it's going to be all bonus points. 68, 69 are going to be all bonus points because you're closing at 70, but your prediction that you bought is 67.5. 67.5 is before 70. So that is going to help you make a lot more profit if you buy certain what I call bonus plays contract. Yes, they're going to be more expensive, but it's going to be more worthwhile. You never want to be cheap in options. Okay, being cheap in options is a good way to just destroy money. Okay, we never want to be cheap. If we don't have the profit to buy a contract, we either play something else or we get into stack mode, collect some more funds, and try to buy another contract. Okay, that makes more sense for us to purchase. Okay, so if I take 67.5 here, and I'm going to go ahead and pull up my price chart. Okay, so this is going to be the options price chart here. So the options price chart is going to show me how much the options contract costs and how much I could potentially make if it hits certain areas. So I can see here, price decided to make this certain low. So just like the actual chart, price made a certain low. Okay, it made this tiny low, and then I can see this candlestick right here, and then price decided to bounce in an upwards direction. Guess what? Price came back down into the same exact low, and it looks like we're trying to go ahead and fill in the area of resistance. Okay, so even on the price chart here, price is looking like a V. So what we want to be doing is just playing V formation, okay? And we're going to be waiting for price to meet up with these areas of resistance over and over and over and over again. Okay, it's really just about making trading simple, not making it difficult, and just taking probable setups. So when you get on the price chart and your price chart looks exactly how your chart looks, that's a really good sign. Okay, that's a really good sign. That's going to let us know that, okay, market might want to actually do what it needs to do. When you start seeing a V formation and a curl, that's a really, really, really good sign when it comes to buying in the upwards direction. Okay. So even Cisco here, for example, okay, I can see all-time highs up here. Okay, we're not quite at all-time highs yet. So let me go to my daily time frame. I can zoom out. Okay, I can see price decided to make a low right here. So price made a low right there, and let me go to my 4-hour time frame and see everything. Okay, so I could see price made this low here. Got on my daily. Okay, I could see a candlestick above the zone. Okay, multiple 4-hour candlesticks are going up. Okay, so even if I bought right here, okay, I know, inshallah, God wills, price wants to have resistance get meet up here. Okay. So even if price were to do something like break and retest off of this resistance over here on the 4-hour, or if it mirrors this area of support over here. Okay. So we can see I have some tiny 4-hour resistance here, which turned into support. And then just like we talked about, even if support gets created, price gets ran through. Okay, you could see price ran through the support here, and then price came back above it and bounced on it again. And then price came back above it and bounced on the support again. Okay, you're gonna be able to see it right there. Okay, so that's letting me know that, okay, price is bouncing in the same area of support twice. Okay, still a support mirror. So even if I wanted to take the trade there, that would still be fine. Okay, and I could go ahead and close it at the resistance all the way up here at all-time highs. Okay, so it's still, give me my ruler, pull it out, and I still have around like 3 points left. Okay, so here, I could do the same thing. I would still buy a year out just to be safe. And I can see on my price chart here, price already made a certain low. Okay, and I can see price wants to try and fill in this resistance gap right here. Okay, and that's gonna go ahead and just be our profit, the resistance gap. Okay, because you know price wants to try and break this area. Okay, it's gonna either try and reverse at this area there, okay, or it's gonna try and break out. Okay, that's just what it's gonna do. It's either try and reverse or break out. So even right here, take Citigroup here. Let's say I have price down here. Okay, I could see price decided to make a low. Okay. Price decided to make a low right here. And then it made a low. 4 hour. Okay. Have this area of support here. And then I have this area of support over here as well too. Okay, so I have triple area of support here. Boom, another area of support right here too. Actually, I'll say just double. We'll delete this one. So I have this double area of support here. Okay, so support being bounced off of once, price went in upwards direction, and then price came down again in the same place, gave me a daily close. Okay, so we have the first one, and then we have a daily close above the zone. So even if I wanted to buy right here, okay, I would go ahead and be able to catch the rest of the gap up to the resistance area up here. Okay, and catch the remaining of the 5 points. Okay, so price is always going to try and hunt this area of resistance. It might not want to break out immediately. Okay, price could definitely hit this resistance and fall straight down. But we don't care because we close at the resistance. Okay, so as long as you close at the resistance, you're going to be good, or support above current price. Okay, so take this trade here on knee. So I marked this out a couple of weeks ago here too, and let's go and let's chat about it. So we can see price here. Price decided to create an area of resistance twice at the same area here too. Okay, so let's go and let's talk about it. So price decided to, okay, let's start over here. Okay, price decided to make resistance right here. Okay, resistance is going to be the area where price decides to fall in a downwards direction. Okay, price made resistance right here. Okay, it made resistance. So resistance is an area where price decides to fall in a downwards direction. So resistance can be broken and turned into support. Okay, so resistance can be broken and turned into support. Okay, resistance can be broken and turned into support. Okay, so resistance can be broken and turned into support, which we can see right here. Okay, and that's going to give us the break and retest staircase formation, letting us know that price potentially wants to go ahead and fill the gaps. Okay, so, and then we can see up here too, price decided to fill in this area of resistance up here. Okay, price met up with this area of resistance. So even after we broke out of the area over here, price decided to make a high. Okay, price turned the resistance into support, did it again. Okay, and then price decided to come up to this area. Okay, and then we met up with this gray box of resistance before price decided to fall in a downwards direction. Okay, and now you can see we're above it to this day. But then you can see this area of support here. So resistance can be broken and turned into support, and that can be the same thing said for support. Support can be broken and turned into resistance. So you can see here you have this area of support right here to the left. So we could see price decided to break that area here. Okay, price decided to break the area of support right here and then turn it into support, turn into resistance. Okay, so support can be broken and turn into resistance. Okay, then you can see the resistance got created again over here. So especially when we're reading our chart on the higher time frames, we're going to be able to eyeball everything. Then we can see the resistance got broken, okay, and turn into support. And then we can see here, price decided to head up to the previous area of resistance up here. Okay, and then we could see up here again, resistance got broken and turned into some more support. Okay, resistance got broken and turned into some more support, and price is going in upwards direction again. Okay, so it's just about making it simple. Okay, not making the market hard, taking good trades that we need to be taking. Okay, not taking any bonky ghetto trade. Okay, and not investing in any ghetto company. Okay, we want to be making sure that the company is making some money and is profitable, etc. Okay, so take this example. Go and pull out my watch list here. Okay, this would be something of what I'd like personally like to play. Okay, so something with just large areas of gaps to be filled. So I could see here, let's take this stock for example, right? You can see price decided to make a low down here. Okay, and made a low down there. Okay, and then price looks like it decided to continue in the upwards direction. Okay, so we made a low down here. And then we made another low up here. Okay, and then I see a higher low being mirrored over here. Okay, so I see a support mirror. Once again, support mirror. So even if we run through it, it's fine. Support mirror. Support. 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 Okay, support. Confirming the lows. Okay, confirming the lows. And even right here, price potentially wants to go for some break and retest. Okay, we want to see if this area of resistance wants to turn into some support here. I'm going to my 4 hour here, and we can see here. So this is why we need our 4 hour time frame. Okay, we want to make sure our extending trading hours is on. You can see the wick down here. Okay, the wick down here correlates with this area of resistance right here and right here within the zone. Okay, and then price decided to bounce in an upwards direction. So if I got on my daily time frame here, just like the other trade, I, inshallah, God wills, would be able to take it up to this area of resistance up here. That price already showed me break and retest down here. Okay, I can see this area of resistance that was created over here. Okay, I have resistance. Okay, and this is going to be resistance because I can see price falling in a downwards direction from this area. Once, and then twice. Once and then twice. Okay, huge. Then from there, we could see price turn the resistance into support. And I like to get on my daily time frame, and I can see a candlestick above the zone. So I have multiple candlesticks above the zone. Okay, so now I can go ahead and safely take my trade, inshallah. So then I know price might want to meet up with this area of resistance. So it already turned the old area of resistance into support, or it already broke out the area. Now let's go ahead and let's make some progress. We're going to make some money by catching the rest of the gap fill to the area of resistance up here. Okay, so same thing. Since I'm on my weekly time frame and my daily time frame, right? You could see the area of resistance up here on the weekly too, where price suddenly just kind of went up and then came down. What we're going to do is catch the whole remainder of this block up here. Okay, we want price to trickle in an upwards direction, inshallah. Okay, this is what we're waiting for. Okay, waiting for price to trickle up. You want it to trickle up. Okay, that's what you're waiting for. So I'll go path, options, I'll buy a year out. Okay, and then I would go ahead and buy the contract one above the current price. Then I can go ahead and see price made the low down here, and then I would go ahead and be able to just wait for my play to go ahead and work out. I could set alerts where I want to close on the chart and wait for my trade. Okay, so let me go ahead and check out another example here. Okay, so even if I traded something like this, okay, I can get on my weekly time frame here. Okay, can see price decided to make a low right here, and then I see price decided to have this area of resistance created with support here. Okay, and I'm gonna go to my daily, and then I have this area of resistance here, and this area of resistance got met up with recently. Okay, so I can wait for price to go ahead and find a certain low Okay, whether if price wants to make a low down here. Okay, even if it wants to make a low down here, or even if it wants to make a low where it's at right now, okay, I would wait for price to come up and meet up with this area. Because we could see price decided to reject at this area once and then twice. Okay, it rejected at the same area twice, and it bounced at this area once, twice, 3 times. Okay, so right now, this is going to be the range that we're going to be able to play. Okay, if we go down, then we go down to a new low. Okay, and then we could try and bounce maybe at a different low and then wait for it to get to the resistance. Either way, no matter how low it dips down to, once it finds a low, it's going to try and break this resistance up here. So whenever price starts curling in an upwards direction on the daily, we can go ahead and get on our options, buy a couple years out or just a lot of months out, and then take our trade. And then take this trade here too. I marked this today. I marked this yesterday, so I can't fake this. Go. So check it. We have this area of resistance that was created right here. Okay. Once again, like I told you, price is always going to be chasing all-time highs. Okay, it's always going to be trying to break resistances. Okay, so let me go to my weekly here. Okay, I can see this resistance high. Okay, and then I have this resistance high, and price broke out. When price gets past an area of support or resistance, that's going to be called a breakout. So let me get on my daily here. I can see the breakout occurring. Get on my 4-hour. Okay, I can see the resistance got broken, turn into a support a bit. Okay, and it looks like price wants to travel in an upwards direction and meet up with this area of resistance up here. Okay, so we still have, from current price, we still have until this resistance up here, still around 3 points in order to catch the remainder of the trade. And then next take profit would be this resistance up here. And then the other resistances up here too. Okay, then we're gonna have this one, then this one, and then final take profit all the way up here. Okay, so let price come to each of these resistance levels here. So resistance there, resistance there, resistance here, resistance here, resistance here, and then we got resistance up here. Okay, we got price passing this area of resistance here with what's called a breakout. So a breakout is when price breaks past a higher time frame area of resistance or support. Okay, and I emphasize higher time frame because that's what we want to be looking at. Okay, a lot of lower time frame levels can really just be tricks and just stuff to make you look at things you don't even need to be looking at in the first place. So you see that price wants to try and bounce, take it to the resistance. Price could potentially reverse at the resistance, maybe. Okay, but for the most part, we'll see what it wants to do. Okay, so this is what I mean when I say like look for a setup here. Okay, we want resistance to be above current price. You want your take profit to be here. We can see why we're entering. Okay, either we're looking for a confirmed low or a confirmed like breakout area. I can see the break and retest got confirmed here, and I can see the remainder of the gap wants to fill into the area of resistance. Okay, so same thing here. Options, I would go about a year out and then be able to buy the contract one above current price. And then that's going to go ahead and show me the contract cost. Okay. So if I'm right here too, okay. If I'm on AT&T, I like to go ahead and mark a zone at all-time highs, especially if I'm close, for example. Okay, and I could see the daily here making curves. Okay, so I could see price decided to make a low right here. Okay, now I'm gonna go to my 4-hour time frame, make sure it looks like what it needs to look like. I have a one low there. Okay. And then I have another low created right here near this zone. Okay, and right here. So even though it broke out down here, okay, price decided to try right here, and it's just holding it again. And on my daily time frame here, okay, one outside of the zone, I have multiple daily candlesticks above the zone. I have one right here, and then I have another one right here. Okay, 2 daily candlesticks going up outside of the zone. Looks like we want to try and fill the rest of this resistance gap here. I can get my ruler, measure the gap here, and that'll be the remainder of points I'd be able to go ahead and catch. Okay, get on my options, choose. We're gonna go a year out. Okay, and then contract, I'm gonna purchase. I'm gonna look at the current price within the middle, and then I'm gonna go ahead and buy the contract that's one above the current price. And then from there, I can see here too on my contract, price decided to make this certain low right here. Okay, price made a low and it looks like it wants to fill the V formation. So that V formation is what all your trades should look like. All trades, all options trades should look like a V. All options trades should look like just like this. It should look like an upwards V. Okay, and you should want price to fill the upwards V. Okay, fill the right side of the V. Okay, because this is a left to right chart, so the right side is always going to be the current price action. So you want the right side of the chart to be filling up the upward curve of the V. Okay, so the downtrend is going to be the left side of the V, and the uptrend is going to be the right side of the V. Okay, and we're going to go ahead and catch the right side of the V, catch the upward curve. And even if price wants to reverse here, we don't care because we caught it up to the resistance. Price could resist and fall all the way down there if it wants to. And we wouldn't care because we closed at the resistance. Okay, and then it might want to find an even lower ultimate low and then come back up. But just the fact that we know it wants to chase the resistance and see if it wants to either go lower or break out from the resistance, we're going to take that logic and just trade to the resistance. Okay, we're going to completely outplay the system. Okay, so that's going to be how to trade options for a living. Stay prayed to God, keep grinding, and that'll be the lesson. All right, let's go and let's talk about how to catch big moves, right? This is going to work for crypto, stocks, forex, whatever. All right, how to catch big moves. So what is a big move? A big move is going to be pretty much a move that involves catching a lot of points and potentially can make you a lot of money. And the reason why we want to be focusing on big moves is because big moves help you turn a little amount of money, okay? So if you have a small account, for example, and the whole goal of trading is to turn a little bit of money into a lot of money, okay? We don't want to be trying to turn, risking a lot of money to make break even or the same thing, okay? Want to be using a little bit of money to try to make a lot of money, okay? And that's going to be scaling with the amount of figures that you have. So 5, 6, 7, 8 figures, etc. You're still going to have the same mental perspective, using a little bit of money to get a large return, okay? So, and that's going to mean a little bit of your portfolio, once again, relative to your scaling. So if you have a $10,000 account, then ideally you want to be using max 10% of your account per trade. Okay, so max $1,000. That's what you want to be using. Okay. Don't want to go over that because then you could potentially just be out of your risk management parameters, throwing you off. Okay. So you want to be using, once again, 1 to 10% of your account per trade. So if you want to catch a big move, focus on the chart too. Okay. Forget about P&L. Forget about the dollar sign. Okay? We got to learn how to read the chart, learn what we're looking for if we want to catch a big move in the first place. Okay. So when catching big moves, once again, don't focus on the profit. We got to be focusing on the process. Okay. Let's go ahead and let's jump into it. How to catch big moves. So if you're on the crypto stock market, you're most likely trading an upwards trending market. Okay, so I can pull up most stocks and I can see that most stocks from left to right goes in an upward staircase direction. Okay, so that's going to be the same for stocks. And let me go and pull up Bitcoin here. Even if I zoom out on Bitcoin, I can see the same thing here. Price started below down here, and I can see price made its way all the way up here to this day. Yeah, so that's going to let me know that price makes upwards direction. Why is price making upwards direction? Okay. So price is making upwards direction movement due to the fact that, one, for stocks, these companies aren't just moving for no reason, okay? These companies employ people, okay? So these companies help the economy. Okay, the more people working, the more people paying taxes. Okay, the more people paying taxes, the better the economy can be because the less debt the United States will suffer. So these stocks aren't just stocks for no reason. Okay, they're not just going up in value as well for no reason. They're helping people. They employ people. They feed families. Okay. And as far as the cryptocurrency tokens, right? So the crypto tokens, a lot of crypto tokens are created by humanitarians. Okay, like Ethereum, for example, created to counter Bitcoin's power wattage mining system. Okay, so a lot of humanitarians create crypto. Okay, people who care. Okay, it's people coding these networks. Okay, coding the blockchain network, coding the hash, etc. Okay, lots of coding involved within the cryptocurrency network. So there's people behind these projects. Okay, they want to see these projects succeed. Okay, they want to see it go up in value. And not only that, a lot of these CEOs of these stocks and owners of the token currencies own shares or a percentage of the crypto token. Okay, so they also want to see it go in an upwards direction. So once again, why else do things go in an upwards direction? Let's talk about safety. Okay. When people feel safe to invest into something or keep their money into a certain place, everyone's going to do it. And the benefit of that on the stock market and the cryptocurrency market, etc., is that the more people are doing one thing within the trading world, so if a bunch of people are doing some buying, then inshallah, you can go and put into place and assume theoretically that price wants to go in an upwards direction. Okay. If you start seeing a bunch of buying on the order flow on your tape, you start seeing whales buy in, etc. Okay, you can assume that price wants to go in an upwards direction. Everyone's doing it. Everyone's putting big money at it, and everyone's betting on it going in an upwards direction. Okay. So keep that in mind. Things that are safe, people are going to feel comfortable investing in. Okay, that's why Bitcoin's been going up exponentially past couple of years, especially once the SEC, okay, government body, decided to gain regulation over the Bitcoin. Okay. And regulation then leads it to a whole new masses. Okay, people who watch the news and stuff like that, etc., then they're going to feel safe to invest. Hence why Bitcoin rose to 112,000 as of right now. Okay. Fairly quickly as well, too. So let me know if you guys were an early investor as well. So that's going to be a reason why price goes in an upwards direction. Now, let's talk about them. Two things. We'll break down resistance and support. So the market can only move one or two ways, okay? One or two. It's simple. That's it, okay? It can either move down or up. When market is moving in a downwards direction, right? All it is people selling. So I like to do everything on my higher time frames too. Personally, I like to use the daily and 4-hour time frames. And those are going to be the two time frames I scan everything with. So I'm going to start off with my daily here. And I could see, once again, this is a left to right chart. But I could see that even from all the way back here in 2017, why did price make this spike right here and then dip down? Why didn't it just go up to infinity? Okay. Let me go ahead and answer this question for you guys. This is why stuff just doesn't go up in a straight line. And this is why you shouldn't panic when stuff dumps as well too. Because anything that goes down will try to come up within the market. So check it out. Price created this area of resistance right here. Okay. And resistance is going to be an area where sellers are present. Resistance means people sold heavily on this or at this level. Okay. And it's going to be best to see resistance on things like the higher time frames. Okay. You want to see resistance on the weekly, on the daily, on the 4-hour. Okay. You want to see support on those time frames as well too. But resistance means that people sold heavily. So why would people sell? Okay, if they're already up so much profit, why would they not think that's going to go to 1 million? Okay, let's put in a logical perspective here. So this is why it's kind of difficult to trade at all-time highs. So people got in way over here to the left, okay, and then price just starts pumping in an upwards direction. Okay, they have no take profit above them. They don't know how high it wants to go up in this one cycle. Okay, so the market's going to start collectively selling, okay, creating a massive sell-off. Once again, anything in the cryptocurrency or market world, as long as it finds its value within the world, it'll make its mark. And we can see here, once certain things started to change, when people started investing into it, you can see this area of resistance here, where price fell down heavily at, decided to be passed. Okay. When market decides to pass the heavy area of resistance or support, we know that's going to be called a breakout. So price broke out right there easily. Okay. And a breakout couldn't be a good move here because why? You don't know how high price wanted to run up to. Price ran up all the way to here. Okay, and there was no previous highs. So this is why when they're structured, it's a lot easier to trade. Okay, and there's going to be some things that you buy and hold and sit in a long-term position. But as far as catching the trend and catching a big move, you want to make sure you know where price wants to exit, where it started at. Okay, and what type of trade it is. Okay, is it a bullish trade or is it a bearish trade? So let's take this example here, right? I have Amazon here. So one thing I know about the market too, I know market's always trying to break all-time highs, okay? Because everything's trying to be the best, okay? Companies want the highest rated currency, stocks want the highest rated value as far as numbers. Okay, tokens want to be the most popular and most used. Okay, so it's very, very competitive. So in order to compete, let's analyze. So you can see here, this area of resistance up here, and this area of resistance up here. Okay, why is that important, Chris? So areas of resistance are going to be extremely important due to the fact that price is always going to hunt them. No matter if price is at $0, if all-time highs is at 200, it's going to try and break that one day, inshallah. Okay, if an investor gives them $2 billion to revive the company from the ground and people start buying into it, it's aiming right for that previous all-time highs, looking to break it, okay, because it's looking to be the best, okay? It's looking to break its future records, break its future numbers, okay? And a company is trying to get better, okay? Just like human beings, we're trying to get better every day. Companies are trying to be the biggest, okay? And be in new levels, have a new stock share value, so they can pay out their workers and shareholders more if they give dividends, okay? So Amazon, for example. So I could see this area of resistance is up here, and I have another area of resistance up here. Okay. Price paused. I just think of resistances as areas where price paused. Okay. Check out this area here. Price decided to create this V area here and bounce in an upwards direction. Okay. So the opposite of resistance, we're going to have support here. Support is going to be an area where price decides to bounce from a downwards demand area. Okay, so price is gonna come down, make a low, okay, and then bounce up from that low, okay, and that's gonna mean it's in demand at that place, okay. So demand is gonna mean support, and resistance is gonna mean supply, okay. So if you ever heard the two terms, that's how you break it down. So when market is shorting, okay, and shorting means selling off, okay, going in a downwards direction. Market is always trying to meet with a area of support below current price or an area of resistance below current price. Okay. So resistance can be broken and turn into support. And when price is going in the downwards direction, especially on the stock and crypto market, it's not crashing. What it's doing is looking for a new low. Okay, it's looking for an area where people demand it, and then they're going to go ahead and get it. Okay. So the area of resistance is always where we're going to know where we want to exit at. So if I have this strong area of resistance up here, I know I'm going to go ahead and close and take my profit up here. Okay. And this is how you can catch big moves, especially on things like options. Okay, it's just closing at the right time and one buying at the right time as well too. Okay, so if price starts showing me price action down here from this area of support, and that breaks all-time highs, etc., okay, then you can keep studying that congruency. Okay. So we got Google here. Okay. Create an area of resistance all the way up here at 257. Okay, we're dumping down to 237. Let me go to my 4-hour here and check it out. Okay. So price kind of met up with this area of support over here. Okay. And I don't like to just get in on the first week once again. I like to wait for that daily close. Okay. That's not the daily close. I'm gonna wait and then book. So we'll jump into another example here, some Tesla. So I can see area of resistance above current price. Okay, price is falling in a downward direction. Okay. Once I start seeing price curve and give me some bullish momentum, I know price is going to try to reach this area of resistance. Okay, trying to beat its competitor. Okay. So take this example here. Okay, amazing example. So we have this area of resistance all the way up here. And let's see, price decides to create its own area of support system here. Okay, and then looking to curl and fill in these areas of resistance. Okay. That's 50 points here of Oracle. And finding a trade just comes down to really just taking your time. So Visa here. Price has this area of resistance up here. My daily, let me zoom all the way out. I can see we're making higher lows. Ultimate low, higher low. Low, low, and then higher low. Okay. So let's start seeing higher lows, price going in upwards direction. That's definitely gonna let me know we're trending hard. Yeah. So I'm gonna go ahead and mark out this other area of resistance over here. Got resistance right here too. Cool. Price falling down in the same exact area. Okay. So A, wait for price to curl, or wait for price to blast past this area, turn it into some support, and then take it up to the next area of resistance. Okay. And then a ruler. And you always know price is trying to hunt resistances. Okay? So don't think that these gaps won't try and fill itself. Okay, because inshallah they really will. So boom, and that's about 20 points here, and it's definitely a neck out flipper. So I'm going to pull up some crypto examples here. Okay, same thing on the crypto market. Okay, we're not going to make it hard. Just keep it simple. So I'm going to pull up Ethereum here. Okay, market's making that big red dip on the daily. Okay, let me delete all the drawings here. All-time highs is going to be all the way up here. So price is looking to make a low. Okay, so we do have a strong area of resistance right here. Right here. Right here as well too. Okay, two very strong areas of resistance. And I believe way over here as well too. Okay. So then price came down, broke the area of resistance, and then turned it into support. Now price is heading within an upwards formation. Okay, and everything remaining till the area of resistance is going to be a move you can catch. You could just enter in the middle of it. Okay, don't stress over perfect entries. Our only God's perfect. And we're going to slow down, see what the price action is talking about. If we can catch or take profits still, we're going to catch it. Okay, if price made a low, it made a low. You start seeing daily closes and curves, you know what time it is. Okay. It's about having the risk appetite too. So even right here, have this area of support right here. Area of support right here. And then area of support right here. Or resistance right here. So support got broken, turned into resistance. The resistance got broken, turned into support. And now price is trying to sweep with an upwards direction. Okay. So if this is successful, I see price wants to sweep here. And I'm going to go ahead and catch the whole rest of the move up to this level up here. Then you catch the rest of the upward up here. Okay. And then the whole remainder of the move is pretty much going to be in your pockets. Okay. So that's going to be 1, take profit, and then 2. So extremely simple here. That's just making it easy for ourselves. Knowing what we're investing into, knowing what we're buying, knowing what we're going to exit. It's really going to be imperative to just making good decisions, okay, and just making sure we're profitable at the end of the day, which is really what matters. So cool. So I'm going to go and pull up another example here. Let's do some XRP. XRP just took a massive dip. The price might be trying to bounce here. We'll see. It bounced really quickly. There's also an area of resistance over here too. Yeah, we have this area of resistance here. Looks like price is reflecting off of that here. And may potentially be going to go in an upwards direction. Okay, so let's go and let's check out this area of resistance up here. Okay, you know we're trying to break all-time highs, so we can keep making new highs. Sure. Okay. So think of market logically like that. Solana, for example. We have Solana is super duper useful. Can't trade Bitcoin without it. Can't trade not Bitcoin, like Pepe the Frog coin with etc. Can't trade without Solana. Okay, so meme coins. So even the same layout here, have support, turn into resistance, turn into support. Okay, so the same thing as Solana. Okay, so this is why it's important to have a just certain strong mindset too. Don't panic sell the same place everyone else is doing it. Okay, be calm. Okay, and you got it. Okay, really sit on your trade, let take profit get hit, and yeah, and doing that is really gonna help your flow up. So let me pull up TRX here. It's the same thing. One thing you're gonna notice too about me pulling up all these crypto pairs, they're all very similar. Each and every single one of them are really similar. So they all do the dip. Okay. And price action was just a little different here. So it looks like we had a dip here. We had a heavy dip on September 6th too. And that's also another thing too when it comes to catching big moves. Be aware of like news too. Be aware of news, the most volatile times, etc. too. Okay. So cool. So yeah, that's gonna be how to catch the big move. So pray to God, keep grinding, and head over to Stackmode.net. So why do crypto tokens burn in the first place? And what happens when tokens disappear? Let's jump into it, class. So the technical mechanism, how tokens are permanently removed. A token burn is not a literal incineration like fire, but it's a cryptographic action that permanently removes a specified quantity of tokens from a circulating supply. This process is irreversible and transparently verifiable on the blockchain ledger. So you can see if it was actually completed and if the token was actually burned and removed. And the black hole address, the burn address. Tokens are sent to a specifically designated verifiable address for which no private keys exist. This is often a publicly known and accessible address like 0 times 000.0000 DEAD. It's an irreversible transaction. Once the transaction is confirmed and the address has been, or token has been deleted, all right? Once the transaction is confirmed, the tokens are then locked forever because no one can access the private key associated with the burn address. The tokens can never be spent, moved, or recovered. And transparency and verification. The entire process is recorded on the public ledger, and anyone can verify the burn by checking the transaction ID and confirming the tokens were sent to the known burn address. This trustless verification is fundamental to the burn's legitimacy. So, some economic drivers. Let's talk about deflation and scarcity. The primary motivation behind most token burns is to introduce deflationary pressure by reducing the total or circulating supply. The burn aims to increase the scarcity of the remaining tokens, theoretically increasing their value based on basic supply and demand principles. And we'll talk about reducing the circulating supply. Burns directly decrease the quantity of tokens available for trading on exchanges and held by users, which can lead to upward price pressure if the demand remains constant or increases in a certain direction. And countering inflation. Many proof of stake or yield generating protocols, and proof of stake is going to be the opposite system of proof of work, where you're exchanging power to create cryptocurrencies. Proof of staking, like Ethereum, uses smart contracts and a whole different system in order to create the cryptocurrency. And they have naturally inflationary token insurance schedule. Okay, so that's for minting new tokens. So many proof of stake or yield generating protocols has a naturally inflationary token issuance schedule, minting new tokens. And regular burns can offset this inflation, aiming for a net zero or even negative deflationary supply growth. So let's talk about some psychological impacts of it. Hype, for example. The announcements of a large token burn often generates positive market sentiments and media coverage, serving as a powerful marketing tool to signal commitment to long-term value. So if a token has a fixed maximum supply of 1 billion and 100 million are burned, the new effective maximum supply will be 900 million. And for every holder, their proportional ownership of the network has slightly increased relative to the total supply. So diverse implementation models, examples of token burns. Token burns are implemented in various ways, often defined within the core smart contract code or through a governance mechanism. And understanding the type of burn is crucial to assessing its long-term impact on the network tokenomics. So the fee burns. A portion of the transaction fees, also known as gas. So if you ever heard the term gas, that's going to talk about transaction fees or platform fees, are automatically routed to a burn address. So for example, Ethereum EIP 1559. And that model burns a base fee on every transaction, making the network deflationary during high demand periods. So buyback and burn. The project uses profits, example, from an exchange or a platform revenue, to buy its own token from the open market and immediately burn them. This creates both buying pressure and permanent scarcity. For example, that's how BNB does. So, schedule and manual burns. Pre-announced or governance voted burns, often related to the initial token supply. For example, burning unallocated team or treasury tokens. These are usually large one-time events. For example, initial coin offerings, the opposite of IPOs, initial public offerings. For cryptocurrency, ICOs, they have post-sale burns. And the impact and critical analysis. Let's talk about benefits and concerns. While token burns are widely adopted, they are not a guaranteed solution for increasing token value and come with important caveats that investors and users must understand. And a key benefit, they have an incentive alignment. By making tokens scarcer, it encourages long-term holding and participation. And security. In some proof of burn mechanisms, burning tokens is necessary to validate blocks, contributing to network security. And certain perceived value. It solidifies the idea of the token as valuable, diminishing assets rather than an infinite resource. And criticisms and concerns. Let's talk about price manipulation. Large sudden burns can be used to engineer short-term pumps, potentially leading to instability. And sustainability. If a protocol burns too much too fast, it may not have enough tokens left for future development, funding, or ecosystem grants. And governance risk. Manual burns controlled by a centralized entity introduce risk, contradicting the decentralized ethos. So the whole point of it is to be decentralized, but if they're able to burn tokens, okay, which can be controlled by someone with a lot of money, okay, that can kind of make it centralized, but not everything's perfect in the world, only God is perfect. So, but tries to make it as fair as possible within the decentralized finance space. We do the best we can. So, token burning. It's a sophisticated economic tool that has become a staple in modern decentralized finance and crypto tokenomics. So it's irreversible, okay? So irreversible, that means that once it's done, it cannot be done back again, okay? So talk to me, guys. So if it's decentralized, right, and the whole point of the cryptocurrency space is to be sending transaction from one person to another, but if a large company with a large amount of money can come in, like a whale, for example, that's what a whale is. Okay, a whale is going to be someone who has a large amount of currency. If they can come in and spend a lot of money, right, and control a transaction or burn a token, right, to increase the scarcity. So let's say they burn a token, right, and then they're holding it, right, and scarcity equals demand, okay? So if you guys ever heard of the term supply and demand, supply means when there's too much of something. Okay, when there's too much of something, there's supply, it's available. But when it's in demand, people are trying to buy that today. And the goal of token burning is to reduce the supply, introducing scarcity, putting demand into it, but it's also going to be used to burn things like certain fees, which can help manage inflation a lot. All right. So just think about it. All right, is it something that's going to be beneficial to you long-term wise? And think, the success of a burn really depends on sustained demand and the overall health of the underlying project. So it's not always going to be a positive thing. It's not always going to be a negative thing. It can really help people, you know, with certain fees and stuff like that, but it can also introduce scarcity in certain coins, causing it to just go up way quicker than it may, right? And if anyone's in a short position of that, that could hurt them. So it could really just see what happens in the future with it. All right, token burning, it's something that's there. It's going to keep happening. And whether it's good or not, let me know in the comments. Catch you guys in the next one. Stay prayed to God. Keep grinding. Catch you guys in the next one. Peace.
So if you've ever seen your portfolio down and noticed gas, groceries, etc. getting more expensive, what's the cause of everything? It's going to be inflation. It's the silent thief. And most people think that inflation just means prices go up, but it really means that your money is worth less and it's going down. The 7% inflation each year turns $100 that you own into just $93 of real buying power, even if your account balance haven't moved an inch. And when inflation spikes, the market reacts like a toddler with no nap. Growth stocks drop, companies can't hike prices fast enough, and profit margins get squeezed. And suddenly those charts are nothing but red candles heading in a downwards direction. But here's the part that nobody talks about. Inflation doesn't destroy every portfolio equally. It's about what you're invested in. Some assets actually thrive in the chaos. Commodities, real estate, energy plays, and even those boring dividend giants that simply pass rising costs straight to consumers. I'm going to go ahead and break down exactly what inflation is, and let's understand it, class, inshallah. So, the term inflation, you guys might have heard of it in school, around, you might have heard your parents talking about it, seen it on the news, etc. We're going to want to break down exactly how it causes other prices to go up, whether it be it on goods, etc., and how it affects stocks and stuff like that as well, too, and how it can affect your portfolio. So, what is inflation in the first place? So too much money and too few goods. So in life, things work off of two things: supply versus demand.
So that's how things become valuable. So if there's a lot more demand than supply, then that means that something is going to be valuable because people want whatever it is, which is why it's in demand, but there's not a lot of supply of it. Why? Because people are buying up all of it. Okay, so supply and demand are going to be the two factors that come into play when we're looking at inflation, or even just understanding how humans trade or an economies work in general. So too much money, but too few goods. Okay, so inflation is the rate at which purchasing power drops. It means that your dollar, so your US dollar, buys less today than it did yesterday. Okay, so whatever your fiat currency is, whether you're using the euro, US dollar, etc., inflation is the rate at which the purchasing power drops, meaning that your $100 might not buy you the same amount of goods as it did 10 years ago. Okay, so the demand pool. So everyone has cash and wants to buy the same limited items. Okay, so that's why prices go in an upward direction. And cost pushes. So let's say materials, right, such as oil and wood, they get expensive. So companies raise prices in order to survive. And the result that comes out of play is that, let's say you'll need $1.05 today to buy what cost $1 last year. And then year after year after year, it keeps going up. So it might start off as $1.05 today, but then 5 years from now, that same item could be $2. Okay. So if you're buying an item for $2, what you did for $1 just a couple of years ago, okay, you're now paying double the price. Okay. So unless you doubled your income, then you have to be ready to, one, subside your income for certain scenarios too. So if goods are getting more expensive, but your income hasn't increased, you either got to A, increase your income, or learn how to rebudget your current income. Okay, that's just how inflation works. So for example, just to break it down, in 1950s, let's say a burger, right? Let's say it was 10 cents. Okay. And then today, 2025, 2024-ish, okay, let's say something's $8. That's happening because more dollars have been printed. The more dollars that get printed and created, the less valuable it becomes. Okay, the reason why diamonds, gold, or even take Bitcoin example, are going to be valuable resources is because they are limited. But take the dollar, all they have to do is go up to the printer and keep on clicking print, and dollars will continue to spawn. So yes, we need dollars in order for the economy to flourish and for us to barter at a successful rate. But if humans continue to lead by their flesh and think that printing more dollars will solve everything, then humans will continue to pay certain consequences, such as dealing with more mental stress for having higher real estate prices, higher grocery prices, higher gas prices, etc. So how do we measure inflation in the first place? We got to take a look at the economic news event results. So let's go and let's jump into it. So let's talk about CPI. CPI is going to stand for Consumer Price Index. So for example, let's take a hypothetical basket of goods, eggs, gas, rent, and clothes, right? The government is then going to check the price of the basket of assets that people need in order to see if it got heavier. Okay, so that's what the CPI report is going to measure. A lot of the times after the CPI report occurs, you'll see a substantial move within every single market, whether it be at the crypto markets or the stock market. Okay, and then we're going to have PPI. Okay, PPI is also going to be very important. PPI is going to stand for Producer Price Index, and it's inflation for factories. So for example, if it cost Apple more to make an iPhone, okay, then that means the PPI would be up, okay, and they will eventually charge you more, okay, which means that the CPI, Consumer Price Index, would be up, okay. So if it costs Apple more to make an iPhone, the Producer Price Index would be up. Why? Because Apple is the producer. Now, if they're charging us, the consumers, more, then the Consumer Price Index, the CPI, would go in an upwards direction. Okay, so core inflation at the baked center of everything. So CPI minus food and energy, right? Consumer Price Index. So why? Because food and gas prices swing wildly, okay? And the Fed prefers core to see the real trend. Okay, so looking at the core inflation of everything is really going to be a much better statistic to look at when it comes to how the economy is actually doing within the full broad picture. But looking at every single news event, such as the rate changes, etc., are really going to help you, give you a good measure of how the economy is standing up and a direction of which the market could potentially head to.
All right, let's talk about the melting ice cube with everything. So cash is a liability. Okay. So cash is a liability. Okay. This is Stackmode Chris talking to you guys right now on some personal stuff. Okay. Ignore the presentation for just a second. You guys should not be spending your cash. Okay. You need to be spending your cash to pay off credit. That way you're going to be able to get more credit and you're going to be able to spend that. Okay. You need to be investing all of your cash. Okay. You should not be spending your cash. Okay. You have to understand that it's a trap. Even when it comes to certain things like taxes, even if when you start touching M's, 6 figures, 5 figures, etc. Okay. If you just save your money and just sit on it and don't invest your money into something that's going to be bringing you into more income, okay, you're going to be getting destroyed on taxes. Why? Because you're just holding more still cash. You're not benefiting the economy and you'll get punished for that. Okay. So please, cash is a liability. The only reason you should use cash is to clear your credit and to build wealth. Don't hoard cash. Don't hoard cash in your walls. Don't hoard cash in your bank account. Okay. Your checking account should be pretty much empty. Okay. Because why aren't you invested in the assets? Okay. You should have your life together. You should have your credit card. Okay. You should be able to survive off of that. Okay. When it's time to pay off your credit card, take your assets. Okay. When you have your profit, take some off the top. Okay. And you're going to be able to pay off your credit card and keep that cycle and flow going. So your money is infinitely going to be flowing in a river. Okay. The moment you pause your money, okay, the moment struggle starts to seep in. So I'm telling you, keep your money flowing on a river at all times. So a lot of people think hoarding cash is the play. Okay. And I know I'm Stackmode Chris, but I'm telling you guys, if you're going to stack up into investments. Put your cash into investments. Don't just sit on your cash. Don't be having your money on just to put the money phone up to your ear and post on the gram. Oh, that's corny. Okay. Put all your cash into straight assets. I don't care if you do real estate, Bitcoin, stocks, doesn't matter. Some of you dividend ETFs. Okay. So many different avenues, whatever you're comfortable with. But I'm telling you, if you want to help your family, even if you die right now, you still want to be making sure some money is being generated, but you can't do that if you just have 100,000 pause in your bank. Okay. But if you have 100,000 in an asset, your family could eat forever off of that. You have 100,000 parked in a dividend, your family could eat forever off that monthly income. But if you have 100,000 parked within a Chase account, Chase is just going to take that money and go trade with it themselves. Okay. So understand that cash is going to be a liability under every single scenario. Cash should be used to pay off credit and invest into assets. Don't get trapped. Okay. So let's say, for example, right? And this is why God says interest is haram in the first place. It's pretty much useless. Okay. So try to invest your money into things that are going to give you a positive equity for curve, because things like a 2% APY, APY stands for annual percentage yield. Okay. So trying to put your money into a account that gives you 2% per year, 3% per year, 4% per year, it's pretty much going to be all of your rest of your time, especially when inflation comes into play. You have to learn how to increase your income, especially if you're going to plant your income, at least plan it into something that's going to give you a much higher percentage yield at the end of the year. Okay. So any type of small percentage APY account, personally, I'm going to tell you, it's just not worth it, truthfully. Okay. So for example, let's say you had a saving account giving you 4% APY, right? And inflation is hitting at -6% each year. Okay. The real return is going to give you -2%. You're poor. Okay. You're poor in every scenario. So I'm telling you, keeping your cash inside of your bank account is a trap. I'm telling you in every single scenario. If you don't believe me, you can go look at your own economic data. But the fact that things only get more expensive means that you need to up your income. Okay. You need to up your income. And in order to do that, your cash needs to always be moving in the river. If you want to have your cash inside of the desert field, that can be you. But if you want to have an easy time in life, I really recommend you guys put your cash inside the river. You must invest in assets that grow faster than inflation to break even and to even see any type of profit for yourself, your kids, or your family. So get in your bag and use your cash, throw it into assets. Don't keep it still. So let's talk about the Fed's brake pedal. So fighting fire with ice. So when inflation gets hot, the Federal Reserve raises interest rates, right? Which means borrowing gets more expensive, mortgages go up, credit cards start going up, okay? And spending starts slowing down. People start buying fewer houses and cars, which means that demand drops, okay? Prices start cooling down. And in the long run,
If people aren't buying products, then these products that are created by companies that are listed as IPOs on the stock market would not be benefited from that. Okay, the more products that are being bought for a company means that higher earnings reports are going to go ahead and be reported for those companies. Better earnings reports, a lot of the chances it is for that company to keep breaking into new all-time highs repeatedly, causing it to go in an upwards direction. But if people aren't buying any items from these companies and people aren't being consumers, then the stock market could head within a downturn due to the fact that the money is not flowing in the ecosystem as rapidly as it should be. Okay, so as soon as consumerism slows down, then the stock market within the short term becomes affected by that. So let's talk about impact on tech versus value, right? So growth stocks, let's talk about tech. So a bad effect, right? So these companies promise money 10 years from now. So when inflation is high, money in the future is considered kind of worthless almost compared to money now. Okay, so investors sell tech. Okay, but then you're gonna have like value stocks. Okay, companies that sell certain boring things make cash now, so they perform better when rates rise because they have pricing power. Okay, so it really depends too. When certain economic data reports come out, certain stocks are gonna get a lot more affected than others. Okay, take like a Build-A-Bear, for example. Okay, that's a very consistent stock that goes up year after year after year after year. Okay, and it's not really based off of the future value. Okay, it's just people going to the mall and building cute bears, couples, kids, etc. Okay, but tech stocks, they are focused and based off of intrinsic value due to the fact of what they do for the future and how they innovate the future. Okay, so not saying either one's going to be better than the other to invest in, but when it comes to certain periods of inflation, if no one has enough money to buy certain expensive pieces of technology, etc., then a lot of companies will suffer. But then companies who just sell certain things like food might progress during periods of inflation. So it really depends on what time period you're in, which is what's going to determine what batch of stocks are going to be performing the heaviest. So you might ask me, Chris, how do we avoid inflation? Okay, what do we do? So commodities, real estate, and things like Bitcoin are going to be a really, really good way in order to park your money due to the fact that these things are going to be worthwhile and useful a lot of the times. People are always going to need a house. Okay. The reason why people invest into Bitcoin is because it gives you borderless transactions. And especially now, as times start progressing a lot more, especially US Americans are more open to traveling to other countries. So instead of having to take their US dollar and put it through transfers, just being able to spend that Bitcoin all around the world gives us a lot better suitability as humans. And then we're going to have commodities. You know, you're going to have energy, gold, silver, copper, etc. Physical things that people are going to be able to buy. So let's break down what these all mean. So commodities, right? So commodities. So if the price of stuff is going up, then owning the companies that produce the stuff is going to be a direct hedge. Okay. So any type of gold mining companies, etc., especially, okay, because gold is going to be a asset that especially goes up when economy is in inflation. Okay, due to the fact that it's something that's going to always be useful and it's a limited resource. Okay, and let's talk about banks. So banks can charge higher interest rates on loans when the Fed raises rates, which potentially increases their profit margin. So be aware of that. Okay, and real estate. So rents tends to rise with inflation, and fixed rate debt gets inflated away. So your mortgage payment stays the same, but your income usually rises. Okay, so keep all of that in mind too. So pricing power is going to be the secret weapon for everything, honestly. So can they raise prices? So the ultimate stock market defense is holding companies that can pass costs to customers. So people buy iPhones even if they cost $50 more, right? Due to the fact that it has a high pricing power. Okay, or take a commodity product. Okay, if brand A raises the price of white t-shirts, then you would buy brand B, okay, giving it no pricing power. Okay, but when you're investing into certain companies that have exclusivity, okay, certain companies that only do what they do and puts a smile on many humans' faces, then even if inflation were to occur, a lot of people would just see that as an opportunity to buy as the market going downwards. Okay, so especially certain tech stocks too that still have a lot of future value and have a lot of expectations to change a lot of things in a lot of ways. You know, if they're going in a downwards direction, people are going to look at that more of an opportunity rather than, oh, the stock market is failing, etc. So the bottom line for everything, just wake up, pray to God,
Be a disciplined person. I want you guys to look in the mirror, feel confident, feel proud of yourself for what you got put up. Okay, feel proud of yourself knowing that you can handle your responsibilities, knowing that you can help your family if things come into play. Okay, don't let your cash melt and don't let it freeze in your bank account either. Okay, own productive assets. I don't care if it's real estate, crypto, shares, dividends, whatever. Find your bread and butter. And if you're struggling to see what you want to invest in, head over to stackmode.net. Stay prayed up to God, keep grinding, and I'll catch you guys in the next one. Peace.
Let's master technical analysis the easy way. Charts isn't going to be that difficult, and once you learn how to read one chart, you know how to read everything. So I'm going to give you guys the best sauce and the best strategies in order to read this chart and make the crypto markets pretty simple to trade. So one, starting off on the main thing, you're going to be needing to use your higher time frames. So your time frame is going to depict on the amount of candlesticks and how much candlestick price action you're seeing. So if I'm on the daily time frame, for example, each one of these candlesticks will represent 1 day worth of price action. Okay. If I'm on the 4-hour time frame, each one of the candlesticks will represent 4 hours worth of price action. If I'm on the 1 minute, each one of these candlesticks will then represent 1 minute worth of price action. The reason why we're using a higher time frames is because we want to be seeing the overall trend on the higher time frame scale. Okay, so year after year, and you have to understand that everything from the left that happens on the chart reacts with what we see to the right today. So everything correlates, everything works together, and we're going to be able to mash it all together. Okay, so now that we know that information, if we use our daily levels, okay, and we put the levels from the left to the right, we can go ahead and put out some trades. Okay, so let's talk to you about some different models, some different stuff I'm going to talk about, and how we're going to be able to introduce them into making profitable trades on the chart. So areas of resistance. Okay, so when you see me mark areas of resistance, it's going to be an area where sellers are going to come in from. Okay, understand that the chart is a left to right chart. Okay, so price action, let's say price action started all the way over here. People are going to take profit eventually. People are going to want to make their money. They're going to want to sell. Okay, so whenever you see price have periods where price dips down after making a high, that's going to be called an area of resistance. Okay, so resistance is going to be an important key factor to knowing where, okay, this is where sellers came in. Okay, so opposite of resistance, there's going to be support. Support is going to be an area where price decides to bounce in an upwards direction from. Okay, so this is going to indicate an area where buyers step in. Okay, so buyers are going to be trying to buy here. So then price can go up in an upwards direction from here. Okay, buying is stepping in since price is going in an upwards direction. Okay, and then when you see price making sharp downturns, that's going to go ahead and signal an area of resistance. Okay, so both of these things are going to be extremely important to go ahead and keep note of. Okay, so resistance has to be broken in order for price to progress in an upwards direction. Okay, so we know the goal of the cryptocurrency market a lot of the times is for cryptocurrencies to go up in price. Okay, so people are trying to gain APY, annual percentage yield, percentages on their dollar. Okay, I know I definitely am. Okay, by buying and holding and investing in something with value. Okay, so when you do that, you're going to be able to progress a lot faster, inshallah. So noting that, we can determine that, okay, the goal of cryptocurrencies is to go up in a certain value. Okay, so if price starts at $100 one year, maybe the next year, price might head over to $10,000. Okay, so let's go and let's check out the chart, for example. So if I check out Bitcoin, I can check price is currently at 113,104 as of right now, today. Okay, so price is all the way up here. If I check 2 years ago or 3 years ago, I can see price all the way down here near the 15,000s area. Okay, so price is at 15,000 all the way down here. Okay, and price is now at 113,000 in just 3 years. Okay, price has increased that much value exponentially within an upwards direction. Okay, so now that we know that, okay, the goal of the tokens and cryptocurrencies are to go up over time, we can go ahead and put that and plot out some really solid, good trades. Okay, so let's go and let's check it out. So back to the drawings here before we jump into the chart. Areas of resistance, once again, have to be passed in order for price to progress with an upwards direction. So resistances have to be broken and turn into support. And then price can go ahead and blast up in an upwards direction. Okay. So once again, resistance can be broken and turn into support. It's not going to happen every time, but when it does happen, that's going to be a really good solid way in order to play a pullback. So let's say price is currently above and it goes back down to an area of resistance, it can turn it into support. Okay, so then price can go ahead and sweep up and you're going to be able to buy a low at the right time. Okay, or you're going to see price decide to bounce at an area of support twice. Okay, so if price decides to hold an area of support twice, then that's also going to be a valid way in order to determine, okay, you know what, price wants to head up in an upwards direction. Okay, so it really just determines on what you're looking at, okay, and the certain type of trades. Okay, so even if price is still going up here, price makes an area of resistance right here. If it comes down, turns resistance into support, it'll go ahead and swoop up and show up. Let me show you an example of this on Bitcoin. So I'm on the daily time frame here. Let me go ahead and zoom in. So I can see price decides to create an area of resistance here. Okay, the major area of resistance that there's always going to be is all-time highs. Okay, so all-time highs, also known as ATH, is going to be when price is at the highs. Okay, it can't go any further. Okay, and this is the furthest price that it's at. Okay, so it's when the highest area of resistance is created. Okay, and price is trying to break it in order to continue further. Okay, so check this area out here. So check out this area of resistance here. We'll go ahead and zoom in. So you can see that this is an area of resistance due to the fact that price wants to fall in a downwards direction, okay, from this area. So price decided to meet up with the top of this candlestick here and fall within a downwards direction. Okay, price went all the way up from this low. Okay, went all the way up from this low. Okay, two candlesticks bounce at the areas of support on the daily. Okay, 2 separate days. Price decided to bounce all the way up, stop here. Okay, once it stopped here, this price decided to get broken over here. Okay, so an area of resistance isn't going to keep getting tapped over and over again a lot of the times. Eventually, price is going to attempt to break the area of resistance, turn it into support. Okay, and then price is going to try and head up in an upwards direction. Or price is just going to break the area of resistance and just break out. Okay, and just head up in an upwards direction. Or price is going to head in the breakouts direction. Okay, it'll happen. It'll break out a tiny bit and then pull back all the way down. Okay, that's going to be called a fake out. Okay, in order to avoid fake outs, you're going to, for breakouts, you're going to play break and retest. Okay, a lot of the times break and retest, you're not really going to get faked out. Okay, especially if you wait for your 4-hour close, which is when you're waiting for the time that you can see over here to the right. Okay, to finish. So let's say we entered at this black line. I would not enter at this candle here because it's in between the black line. And I would not enter at any candle that tests the black line. I would enter at a candle up here, okay, above the black line. So this way, if price decides to burst down below the black line, I'm not going to be upset that I lost. Okay, I'm going to go ahead and just take the closed candlestick, okay, and take the trade this way. This way I know that, okay, you know what, price might want to go ahead and sweep up. Okay, so the earliest entry might not always be the cleanest time to buy a lot of times. Sometimes it's better to just trade the confirm entry, okay, and just wait. So this right here would go ahead and be a good example, okay, of a close that I'd be waiting for. Okay, and then my take profits, I'm going to go ahead and set it for either all-time highs, depending on what I'm playing. If I'm playing cryptocurrency or shares, I'm playing for all-time highs. Buying at dips, and I'm playing for all-time highs. Okay, I'm going to be waiting for price to sweep all the way up, okay, and to do its thing. Okay, so you're just waiting for price to do its thing. Okay, and once again, areas of resistance like these up here, okay, are going to be your take profits. If you're playing along and you're waiting for price to go up, okay, your areas of resistance are going to be your take profit. So up here's an area of resistance. Okay, up here's an area of resistance. Okay, and both of these areas of resistance are going to go ahead and be able to be played. Okay, So make technical analysis simple when it comes to trading cryptocurrency. So I pray up to God. Keep grinding. And head over to Stackmode on it for all trading education. Peace. Class, let's go and let's jump straight into it. Today we're going to be talking about mastering financial analysis, and this is going to be the beginner's guide. So what is a financial statement analysis? Financial statement analysis is going to be the process of reviewing and evaluating a company's past and present financial reports, the three statements, to make better economic decisions. And then it involves calculating key ratios and comparing data over time against competitors. So we want to be making sure we know how to read how much is a company making? Does it have a lot of debt? And are we going to be able to profit off the company due to the fact that A, they're putting a smile on people's faces and it's a profitable company, which is going to affect the future? And is it a company that's hiring people and nonstop making profit? Okay, because that's going to let us know that the share price has an incentive to increase. So it's going to be a comprehensive course on analyzing a company's financial health. Let's understand that the financial statements are going to be the bedrock of intelligent investing, effective management, and sound business decisions. Whether you're an aspiring investor, a business student, or a founder, these skills are going to be fundamental and imperative. So let's take a look at past performance. So you got to look at past performance to identify trends, growth rates, and recurring issues with the company. And comparative analysis, benchmarking the company against its closest competitors, peer group, or industry averages. Okay, see how it's faring up. If it's a tech company, see how it's faring up against other tech companies. If it's a healthcare company, see how it's doing against other healthcare companies. Okay, and do it like that. And forecasting, using historical data and current trends to project future financial performance. So it allows us to answer certain critical questions about a business. Once again, how much money are they making? And are they in debt? It's pretty much going to be the two main questions that's going to let us know if something's going to be a good investment or not. So the income statement, profit and loss, and measuring performance. So the income statement is also known as the profit and loss statement, and it measures a company's financial performance over a specific period of time, for example, quarter or a year, and it shows how revenue is transformed into net income. And the core structure, a journey to profit. The statement is constructed like a ladder, and subsequently deducting expenses from revenue to arrive at different levels of profitability. And the revenue sales. Revenue is going to be the total amount of money that's generated from the sale of goods or services. And this is going to be the starting point. And the first thing we want to look at is the company making money in the first place. Let's check the cost of goods, COGS, the direct cost attributable to the production of goods or services sold. And this includes raw materials and direct labor. And gross profit. Gross profit is the revenue minus the cost of goods sold, and this metric shows a company's ability to manage its production cost. An operating expense, OPEX, the costs not directly tied to the production, and primarily selling, general, and administrative, SG&A, and research development. An operating income, this is earnings before interest and tax, and this represents the profit generated from the core business operations. And let's talk about net income. Net income is going to be the bottom line. And income is going to be the operating income minus interest expense and taxes. And this is the profit available to shareholders. So the key income statements, ratios. How to analyze the P&L effectively, you got to use margins to see what percentage of the revenue remains at certain profit levels. And gross profit margin is calculated by dividing the gross profit by revenue. And a higher gross profit margin indicates better efficiency in production, which means they can go ahead and scale the business up while still bringing in profit. Okay. So the balance sheet, the accounting equation. So the balance sheet provides a snapshot of a company's assets, liabilities, and the owner's equity at a specific point in time. And it's based on the fundamental accounting equation, which must always hold true. So the foundation assets, okay? Assets equals liabilities plus equity, okay? So this equation dictates that everything a company owns, its assets, must have been financed either by debt or by owner's contributions, which is going to be the equity. So assets, they're going to be whatever the company owns. Assets are anything of economic value that can be used to produce goods or services. And current assets, they're expected to be converted to cash within 1 year. For example, cash, accounts receivable, and inventory. And non-current assets, long-term items are not easily converted to cash. Property, plant, equipment, and intangible assets. And liabilities, they're going to be what the company owes. Liabilities represent the company's obligation to external parties. So current liabilities, obligations due within 1 year, for example, accounts payable and short-term debt, and non-current liabilities, obligations due beyond 1 year, for example, long-term bonds and deferred tax liabilities. And section 3, the shareholder's equity, okay, and that's the owner's claim. And equity is the residual claim on the assets after all liabilities have been paid off. And it includes common stock and retained earnings, which is cumulative net income minus the dividends paid. So that's how you get that equation too. And so let's talk about tracking real cash. The cash flow statement is often considered the most reliable statement because it bypasses non-cash entries like depreciation and crucials found in the P&L and balance sheet, and it shows the net change in a company's cash balance over a certain period of time. So the 3 core activities, OIF, the CFS is divided into 3 sections that explain where cash was generated or spent. So 1, the cash flow from operations, CFO. This section starts with net income from the P&L and adjusted for non-cash expenses and changes in working capital accounts. This tells you the actual cash generated by the company's normal business activities. So the key adjustment, adding back depreciation and amortization, which is pretty much going to break down expenses on the P&L, but do not involve an actual cash outflow. And working capital changes. Changes in accounts like inventory, accounts payable, and accounts receivable are adjusted here to reflect real cash movements. And cash flow from investing, CFI. This tracks cash used for investments in long-term assets or revenues from selling them. And the largest item here is usually capital expenditures, CapEx, which is the cash spent on maintaining or expanding PP&E. Okay, so interpreting CFI. So a negative CFI, right, which is going to be the cash outflow, is often a sign of a growing, healthy company that's investing heavily in its future by purchasing equipment or new facilities, looking to scale its business outcome and business income by putting all the profit back into the business pretty much. And a large positive CFI may indicate a company is selling off core assets, which can definitely be a red flag, okay? Which means they're going broke. So if a company's going broke, that's not a good sign. And it's a good sign that the stock might actually crash within a negative direction. So check a look for that. So turning data into insights. Ratios allow us to standardize financial data across companies of different sizes and asset-specific aspects of their health. Most notably liquidity, which is the short term, and solvency, which is the long term. And liquidity ratios, can we pay the bills? These ratios measure a company's ability to cover its short-term obligation using its short-term assets. Generally, a higher ratio is better, but industry context is crucial. So its current ratio. The most common liquidity metric is it compares a company's total current assets, which is its cash, receivables, and inventory, against its current liabilities, which is its payables, short-term debt, etc. And a ratio below, let's say $1, is usually a 1 sign. And the current ratio is calculated by dividing current assets by current liabilities. So, quick ratio, the asset test ratio. A stricter test of liquidity, excluding inventory from current assets, as inventory can be slow to convert to cash. And this ratio focuses only on the most liquid assets. And the quick ratio is calculated by subtracting inventory from current assets, then dividing the result by current liabilities. So, solvency ratios, long-term survival. Solvency ratios gauge a company's ability to meet its long-term debt obligations, and whether it is financially sustainable. Excessive debt can cripple a business during economic downturns. So debt to equity ratios, DE. It compares the amount of debt financing to the amount of owner investing financing, and a high ratio indicates a company is highly leveraged. And the debt to equity ratio is going to be calculated by dividing total liabilities by the total shareholder equity. Let's talk about the interest cover ratio. It measures the company's ability to cover its interest payments using its operated earnings, the EBIT, and the interest coverage is calculated by dividing EBIT by interest expense. And a ratio of $1.5, for example, or higher is generally considered safe, but the higher is going to be better. So putting it all together, let's talk beyond the numbers. While the financial statements provide the objective data, a world-class analyst always incorporates qualitative analysis to provide context and foresight. And let's talk about the qualitative factors, the moat. These are non-numerical factors that determine the longevity and strength of a company's competitive advantage, its economic moat, and management quality. It assesses the track record and reputation of the executive team and asks, do they make rational capital allocation decisions? Are they investing their profit profitable? Okay. And asking those questions is going to be a good thing to know before we just put money into an investment. And doing the industry analysis. Is the industry growing or is it shrinking? Okay, tech industry as of currently in the 20th century has just been booming, for example. And what are the key competitive dynamics? Okay, is there any threat of new entrants? And what's the pricing power of it? Okay, and competitive position. Does the company have a sustainable edge? Okay, patents, brand recognition, low cost reduction, and how many smiles does it put on people's faces? And the small summary of the three statements. Okay, the three financial statements. Okay, one, your income statements. That's going to be the performance over a period, and it focuses on the profitability. Okay, for example, margins, how much money a company's making. And the balance sheet, it's going to focus on its assets, liabilities, and equity at a point in time, and it focuses on resources. And then we have the cash flow statement. It tracks cash movements over a certain period, and it focuses on liquidity and funding activities. Okay, so look at all of them. Okay. So your goal is to cross-reference the three statements. For example, if the net income, okay, is high, but the cash flow from operations is low, it suggests that the company is booking sales, but not collecting cash. That's a critical finding, okay, meaning that it's sinking, okay? So figure out what you guys want to invest in, okay? Stay prayed to God, keep grinding, and head over to stackmode.net to learn how to trade and invest. Peace.
Let's go ahead and talk about crypto wallets. So I want to go ahead and break down the difference between hot wallets and cold wallets, as well as keeping your crypto secure by making sure you guys lock down your seed phrase. So let's jump into exactly how we can secure our cryptocurrency. Inshallah, if God wills. Boom. Let's talk about how to secure your crypto like a pro. So if it's not your keys, it's not going to be your coins. I want you guys to understand the difference between ownership and just keeping your keys on a broker that if they get shut down or something like that, you won't have access to your crypto, or they could even limit how much crypto you could send, withdraw, deposit, etc. And that's not what you want. The whole reason we're trading crypto in the first place is so we can have some freedom over our money, inshallah. So let's talk about it. So hot versus cold wallets. So the vital distinction, understanding where your private keys live is going to be step one. Understanding where your private keys live is going to be step number one. So the hot wallet is going to be online. Apps on your phone or your computer, for example, Coinbase or MetaMask, keys are on a device connected to the internet. Convenient, but can be hackable. If people guess your Google or hack into your 2FA or multi-factor authentication, etc., then they're going to be able to have access to your crypto. Not what you want, because then they're going to have access to your money. So let's talk about what a cold wallet is. So a cold wallet could be like a USB drive, a little block device, etc. And it's going to be a physical device, and it's a hardware wallet that stores keys offline. And it never touches the internet, and it only signs transactions. So what you can do is buy your crypto on a hot wallet and then transfer it to a offline cold wallet. So it's kind of going to be like cash, but cryptocurrency. So you guys are going to be able to transfer it to hot wallets and transfer it to your bank if you ever need to, etc. So a cold wallet is pretty much going to be like cash, but for crypto. And a hot wallet is going to be like the online live store where you can purchase and store cryptocurrency as well too, but it comes with limitations. Let's continue on. So the seed phrase, also known as the recovery phrase, make sure you guys keep this safe. I don't care if you guys put it inside of a notebook, if you guys write down the keys on a piece of paper. A lot of the times it's going to be a 12 to 24 key word phrase, okay? And it's going to be random words like this. So for instance, like which, collapse, practice, feed, etc. And then 24, some brokers only do 12, okay? So when you create a wallet, you get 12 or 24 random words, and this is going to be the key to your vault, pretty much. If you lose the words, okay, then you cannot get access to your vault. Once again, if you lose the words, you're not going to be able to gain access to your vault. So never type it in on a computer unless it's somewhere where you feel it's secure and safe. Try not to take photos of it because people can hack into your iCloud. I'm not too sure about Google. I haven't had a Samsung phone in a few years, but I'm sure there's going to be ways that people could access your photos too. And try to write it down on like a piece of paper, multiple piece of paper if you can. Store it somewhere, you know, in case paper gets burned, lost, wet, etc. And try and just store it password protected. If you do store it online,
there's going to be ways to password protect your documents. You guys can put it inside of a WinRAR file. WinRAR is going to look like the stack of books. It's going to be an icon, and you should be able to put a .text file, .txt, and you could put it inside the WinRAR and then password protect it, and then you could upload it somewhere, wherever you want, because only you know the password at the end of the day. So keep these words secure and safe. Please, for the love of God, do not lose these words. And there's going to be a lot of phishing scams and stuff like that too. You're going to see online like, hey, I lost my account, and it's going to be a bunch of random words like this. They want you to log in, buy crypto, and they're going to try and take your money. So never try and take people's money. Never log into somebody else's wallet. Okay, be righteous, be focused on God, and be focused on your bag. Stay in your bag. Don't try and scam. Don't try and do little weird stuff trying to get some money real quick. Stop it. Okay, be genuine, work hard, and most importantly, pray every day. So keep these words secure, and you guys can also keep these words for your kids, your family down the line, etc. Just as long as you keep it secure. Stuff happens in life though. Once again, papers could get wet, fires, etc. A lot of stuff goes down. But if you write it down like some metal, keep it with you, and upload it to multiple sources with a password protected form, then you could have your money secure in a nice way. Let's continue on. So hardware wallets, okay, the standard. Boom. Physical security. To be a pro, you must move significant funds off exchanges such as Coinbase, okay? And how it works. The device generates keys internally, and the keys never leave the chip at all. And you must physically press buttons on the device to approve any outgoing money. So hackers cannot press the buttons remotely. You got to have the actual cold device in front of you. Now, you can't be running your mouth telling everyone on the block like, yo, I got 10,000, I got $1 million on my crypto wallet right now. You know what I'm saying? That's not playing a good game. Still, you got to be secure. Just like if you have cash, you know, you got to worry about little security things. And for verification, you must physically press buttons on the device to approve anything. Okay, so unless somebody actually has it or robs you, God forbid, okay, keep it safe, keep it locked away, keep it inside of a safe even if you got to, and just keep it secure. And some popular brands are going to go ahead and be Trezor, there's Ledger, Cold Card, and Bitbox. There's going to be some other ones as well too, and they pretty much just look like little USB devices. Now, let me go ahead and tell you guys about something. May God bless his soul. There is a guy who lost his hardware wallet, and he had a bunch of cryptocurrency on it. And he spent millions of dollars clearing a trash excavation site trying to look for it because he accidentally threw it away. So it just like cash, you got to take care of it. There's been times where I've had cash inside of my coat pocket and I accidentally put it inside of the washing machine. And thank God you could wash cash, so it was okay. But like little things like that, like you got to just be on top of it if you're going to have a cold wallet. So if you're lazy, if you're not consistent with your things, you know what I'm saying, things like that might got to change. Pray on it, get better, improve, and just understand that the hardware wallet and cold wallets, you got to take care of them. It's going to be secure, but you got to keep it secure yourself in real life. All right. And the passphrase, the 25th word, the hidden wallet. Advanced security feature supported by most hardware wallets. So the seed phrase plus the passphrase equals a totally new wallet. So if someone finds your 24 words, God forbid, they see wallet A, okay, and it's going to be more of a decoy, okay, a dummy, a fake, but your real money is going to be in your wallet B, which requires the extra word that you memorize. So if you forget the passphrase, then the funds are going to be lost forever. No recovery, there's no support you can go run to like, hey, I lost my money. Like, no, you want to play cryptocurrency, you want to invest in a cryptocurrency, you got to have the responsibility of pretty much being your own bank. Okay, you control when you send your transactions, you control how you store your transactions, and be on top of your stuff. Okay, just like if you're your own bank, you could choose between cash, digital currency, etc., whatever you want. Okay, same thing with cryptocurrency. You can go hot wallets, cold wallets, find your sauce, do your thing, and do what feels right for you. Okay, if it feels right in your stomach, then that's just what it needs to be. Okay, so fire and flood protection. So paper burns. Psh. Writing your seed phrase on paper is going to be risky. Houses burn down, pipes burst, stuff could get wet. So you could use things like steel plates. Use a center punch, if you guys have ever seen that, kind of like the things that look like Braille. So you could use a center punch, or you could use tiles to record your seed words on a stainless steel or titanium surface. This way that if anything happens, such as a disaster, God forbid, as long as you don't lose it, it's going to go ahead and be indestructible for the most part. It can survive house fires up to 2,500 degrees Fahrenheit and corrosion, and as well as any water and things like that. And it's just a one-time cost, kind of like a safe if you wanted to keep your cash, jewelry, etc. safe. So it's a small price to pay to secure your life savings absolutely forever. So keep that in mind. There's going to be multiple things you could do, multiple ways you guys are going to be able to keep your money secure and safe. But keep your money to yourself. Okay, evil eye is going to be a very real thing in the world, sadly. So don't be running around telling everyone on the block where you have your cold wallet, where you have your phrase, etc. Okay, keep it just between you and your family, inshallah. So as far as the security checklist, right, let's ask ourselves, do we buy a hardware wallet? Okay, because if not, you could go ahead and invest into a Treasure, Ledger. There's going to be multiple ones you could check out. Hop on Amazon, eBay, the internet. There's going to be some hardware wallets you could check out. Okay, God wills. And write the seed phrase on steel. Try not to do it digitally just in case you ever get hacked, God forbid. And never type the seed phrase into a computer or a browser unless it's password protected. If it's password protected, okay. And try to use the extra passphrase for extreme large amounts in case somebody ever gets your 24 words. And always do a small test transaction first. Okay, you want to do a small test transaction first. So that's going to go ahead and be it. I love you guys so much. Stay prayed up to God. Keep grinding. Don't ever give up, even when things get hard. Pray to God every single day. Try to work out if you guys are feeling any type of anxiety or anything like that about your money. Keep it secure and don't be overly boastful. Okay, spend moderately, and catch you guys in the next one. Read Quran and listen to God. It's the easiest way to be successful. Catch you guys in the next one. Peace.
Okay, so let's talk about how to research stocks. The best stocks to go ahead and invest in are going to be the ones that have some future value. So anything where people are going to be helped within the future, and anything that's going to put a smile on people's face, ideally, is going to be a good stock. Okay, so anything that's helping the most people, it's going to be something that's going to be the most valuable. So this is going to be a step-by-step guide to analyzing certain stocks that are going to be profitable. Let's go and let's jump into it. So why does research matter in the first place? Okay, so this goes further than speculation. So researching a stock is the cornerstone of successful investing in the first place. It allows you to move beyond speculation and base your decisions on a company's real value, rather than on market hype, such as like Instagram hype, Twitter hype, or anything like that, or a rumor. Okay, and a disciplined research process helps you understand what you own, okay, and how you're going to manage your risk. So managing your risk is pretty much going to mean how much money you're going to be saving, okay, how you're distributing your money, okay, and how much money you're going to be risking per trade. Okay, so that's what managing a risk is going to mean. And it's going to identify true long-term opportunities by, once again, making sure we're investing in companies that have future value invested into it. So anything that's putting a smile on people's faces, anything that's helping people, inshallah, year after year, should go ahead and be beating earnings, okay, because it's going to be making money. Okay, anything that's putting a smile on people's faces, for the most part, is going to be making money. Okay, and then when companies are making money, stock value decides to go up. And since as shareholders, we're pretty much going to be company holders, at the bottom value here, we're going to be in. Let's say we get in right here, and then we can go ahead and exit at the top, right? Because we went ahead and got in before price decided to pump up super duper hard, because we did our research before, for example. So informed decisions are going to help us out. Research gives you the data needed to assess a company's health and future potential, reducing reliance on guesswork. And without research, you're simply gambling. So risk management. By understanding a company's fundamentals, you can identify potential red flags and avoid overvalue or unstable investments. It helps you quantify your risk exposure. And proper analysis
helps you find stocks that are undervalued by the market, providing the opportunity for long-term growth and capital appreciation. So depending on whatever time period you're in, okay, let's say as of 2025, AI is super duper popular. Okay, so a lot of companies dealing with AI when it comes to chips, like Nvidia, for example, are going to go ahead and be extremely popular. Okay, so whatever time you're watching this in, okay, relate it to the current sector. Okay, whatever is popular within your current sector, see what companies are advancing the future forward, and go ahead and invest into that. Make sure you're doing your TA, your technical analysis, and read the charts. Okay, try and buy certain areas that are going to involve dips, and make sure there's some resistance above current price, so you know price is something to hunt for. And keep your risk management in place. By understanding a company's fundamentals in the first place, you can identify potential red flags and avoid overvalued or unstable investments. Even if a chart is looking pretty good, if a company's fundamentals aren't good, then the company just won't work out, or a lot of the times the trades won't work out how you want them to. And it's going to help you quantify your risk exposure. So, identifying the value. Proper analysis is going to help you find stocks that are undervalued. Once again, okay, so finding undervalued stocks is going to mean that, okay, I'm going to be able to catch this low, and I'm going to be able to catch the whole sweep up into the highs before it starts getting popular, okay? But be careful when you're doing this. Don't invest into things that don't have any value, okay? And don't invest in any meme coins or any meme stocks, okay? A lot of the times things like that are not undervalued. They're valued low for a reason, and they only burst a couple times a season due to just certain events that most likely won't happen again. So a guiding compass. So in volatile market conditions, your research is going to serve as a compass, and it allows you to stay the course and avoid making emotional, fear-driven decisions within the market that could plummet your account entirely. Okay, so make sure you do your research and understand why you're getting into the trade. Make sure the technicals and the fundamentals behind the trade make sense. So, fundamental analysis. Let's talk about core financials. So fundamental analysis is the process of measuring a company's intrinsic value by examining its financials. Okay, so you're going to see if the company is making money or if it's losing money. Okay, and you can also determine if it's profitable regarding its economic factors. So if a company is like, you know what, we're banned in all countries besides this country, that's an economic factor that could potentially drive the price in a downwards direction due to the fact that that's less sales being available, since that's less volume available to clients, since countries are being banned, okay? And it's going to help you determine if a stock is a good long-term investment by looking at a company's financial health and not just its current price. And key financial metrics. So let's take a look at the PE ratio, a common valuation metric that compares a company's share price to its earnings per share. A high PE, and that means price to earnings, okay? Price to earnings, PE. Price to earnings ratio can indicate a stock whether or not it's overvalued or has a high growth expectation, while a low price to earnings value may suggest that it's undervalued. Okay. And EPS. EPS stands for earnings per share, and it's a company's profit allocated to each outstanding share. And rising EPS is a sign of profitable and a growing business. It's a key indicator of a company's profitability. And revenue growth. It measures how quickly a company's sales are affecting the company's revenue, okay, in an increasing manner. And consistent revenue growth is a sign of a healthy and expanding business, indicating strong demand for its product or services. And ROE stands for return on equity, also known as ROE. And it's a measure of financial performance calculated by dividing net income by shareholders' equity. Okay. So ROE reveals how much of a profit a company generates with the money shareholders have invested. And a high ROE generally indicates efficient management. And this ratio indicates how much debt a company is using to finance its assets relative to the value of shareholders. Okay, and that's gonna be called the debt to equity ratio. Okay, so the debt to equity ratio is going to indicate how much of a debt a company is using to finance its assets relative to the value of shareholders' equity. Okay, and a high D ratio can indicate high financial risk. So charting the course, technical analysis, also known as TA, It's reading the charts. Okay, study the charts, understand the charts before you even put a dollar into the market. Okay, understand support. Support is going to be a low area where buyers are going to step in, price is going to potentially push in an upwards direction from there, and resistance is going to be an area where sellers step in and price should head in a downwards direction from there. And technical analysis is the study of past market data. This is a left to right chart we're going to be reading, so anything that happened to the left is going to be relevant to the right. So it's the study of past market data, primarily price and volume, to forecast the future price movements.